Hello everyone, welcome to another stream. I hope you're doing well. I'm feeling a lot better than yesterday because yesterday I was just had a full head of all of the information in the markets and got a bit burnt out from last week of just looking at that yen intervention. So now I'm more fresh, which means I can operate better and give you guys better trade ideas, better trade analysis as well. So, good morning to everyone. I can see you in the comment section. And yeah, so basically last week, if we pull up the calendar, we had the FOMC statement, we had the Bank of England event, which was kind of a non-event. Not much happened out of that. We had the Bank of Japan, which was a big one, and we had of course, the Japanese yen intervention, which was the biggest thing. So absolutely packed week last week. Apparently, so the way that last week kind of revolved or occurred was what was happening for 50 weeks in a row after the 2008 crisis. So that is something that Brent Donnelly mentioned in his in his latest sort of weekly recap. When he was trading through 2008 crisis, they had packed weeks with a bunch of stuff, okay, with a bunch of events, and it was super volatile. So what can we do today? I did go through the breaking news. I didn't see much that was in the red or that was super important, let's say. One thing that is interesting is we're getting, ETFs. We're getting the SPY to going up a lot. So we saw the V reversal, which happened last week on Wednesday. The V reversal was because the Fed event actually turned out more dovish than expected. Okay, so I was counting on a hawkish event last week. That didn't really happen. We essentially turned out to be more dovish. Stocks love that. You also had the Leopold guy, Leopold Aschenbrenner, this guy. So his fund, what is this? Okay, this is kind of a hit article, a hit piece. This guy apparently blew up his fund and he sold the holdings to this dude, which runs Citadel, I think. But anyway, a lot of selling was happening from Leopold, and I think because of that, the Qs especially were moving a lot lower. And once the market found out about it, so once the market learned that all of the holdings are essentially going to be transferred to Citadel, which is this person right here. Let me see. So who runs Citadel? Kenneth Griffin. Yeah, Kenneth Griffin. So that is the guy who apparently bought the holdings from Leopold. And that made the markets a bit more confident, made them a bit happier. So we rallied out of that. I did try and take a stab long on the Nasdaq. If you're in the A1 Trading Discord, you did get a signal on that. So I did try and take a stab long. Got stopped out by a couple of points, and then the price did continue going up. I'm still happy with the position. I still think the position was high probability, especially with the dovish Fed, and especially because this dovish Fed painted the picture for a lot of future events as well. It painted the picture of, first, Kevin Warsh was faking it when he said that inflation is a concern. He was pretty hawkish on his first meeting. All of that got walked back. We are now seeing that the Fed doesn't really care that inflation is above 2% and rising. And it looks like that they will only start to care once inflation goes above 6%, 7%, something like that. So if you look at the inflation, CPI, it's take a look at the US dollar. This is it. So it's slowly creeping up higher because the Strait of Hormuz is still closed, because oil is still moving up. That is putting pressure on inflation. This CPI is probably going to continue going up. And that is a sign that, well, the Fed should do something. The Fed should definitely either schedule hikes for later this year or hike right now. That isn't happening. The market is interpreting that as dovish. So stocks are rallying hard on the news. Gold? Is something happening to gold? No, nothing is happening with gold. So there's a comment, gold is about to go parabolic. That's why I thought something was happening, but gold is the most boring thing to look at out of everything on the list. Well, alongside of silver, gold just doing nothing. Crypto, Bitcoin just doing nothing. So the edge is not here. The edge is non-existent right now. I don't know what you would do here. Can you drop it to maybe the 5 minute? Trade the 5 minute? Maybe. Like buy these bottoms, sell the top. Well, you could do that, but I think you're just going to pay commissions and fees and your edge is non-existent. You're probably going to be a break-even trader, but when you add on the commissions and the fees, you will be a net losing trader. For gold, personally, I need to see a breakout of some sort of a level. Like, give me something. And that's one part that is concerning, because the SPY is going up on a dovish Fed, but gold and crypto are staying flat. And that's a big concern, because you would expect on a dovish Fed for stocks to go up, for gold to go up, and for crypto to go up. They usually need to move in tandem, especially when the Fed shows their hand, and they definitely showed their hand last week on Wednesday. So I don't think you know what I know. This is fundamental. Well, the market doesn't care about your fundamentals. Do you know how I know that the market doesn't care about fundamentals? Look at SpaceX. SpaceX, this company was trading at one point at $220 per share. This company doesn't make a profit on paper. This company loses money every single year. All of this speculation right here, the value of this should be definitely below 100, maybe even around 50, because just looking at their assets, all of this hype, all of this pricing is purely because of future projections. And future projections on paper, they don't mean crap. So if you're talking about fundamentals, the markets, they don't really care about fundamentals. And as far as gold goes and trading gold, I would first need to see a break of a level. And so I'm being a bit mean right now, because I was in the same boat as you at one point in my career, in my trading career. So a couple of years ago, I was trading 6 currency pairs, and that's all I did. I jumped onto the streams from TraderNick. I talked about my 6 currency pairs. Nick mentioned something else. I didn't even want to talk about anything else. I was just trading my 6 currency pairs. And I had some success at the start, but then came the period of the drawdown of range 1 price action. Forex volatility went to nothing. So trading Forex became a non-profitable endeavor unless you were trading central bank events and interventions. And essentially, my 6 currency pairs, they stopped moving altogether. So I had to do something. I had to switch, and I had to become a real trader, a professional trader. What does that mean? Well, if you follow any professional trader with a certified track record, if you read any of the interviews, if you read any of the books, Market Wizards, those guys, they trade everything they can or anything they can. Okay? So those guys trade everything on this list. As long as it's moving, they are trading it. The reason for that is gold can stay range bound for years. for years. Look at this period. Actually, look at this period from 2011 to 2018. Nothing. And during this time, if you were a gold trader, you would basically sit on your hands for 7 to 8 years. Now, if you have the capital to do that, if you can pay your expenses for 7 to 8 years while doing nothing, well, go ahead and enjoy your life. But most traders, they have to trade. They have to make capital somewhere. So yeah, you need to diversify. If you want to become a professional, you need to diversify. You need to build a watch list such as this one. You need to look at everything or anything that is moving. Right now, the edge is probably in the yen. So the edge is probably trading the yen. I'm in a short position on Swiss yen. I took 60% off. I still have 30% running, which I'll most likely, I don't know, will I hold it? Maybe. You have three forces at play. You have first, intervention. Second, hawkish Bank of Japan. Third, GPIF pension funds. Selling foreign assets and buying domestic. Okay. So, three forces, all of them pushing the yen to the upside. Intervention has already happened. That's why long term, I'm definitely bullish on the Japanese yen. And Swiss yen seems to be the best way to execute such a position because the swaps are low. The swaps with holding Swiss yen are on the low side. Or they can even be positive if you have the right broker. The second edge that I see is doing something with the US dollar. Maybe not right now, but definitely going into the next Fed event, which I'm betting is going to be again dovish. I don't think that they hike interest rates. I think this pricing right here. So in my opinion, this pricing is wrong. There's not a 63% chance for a rate hike. I don't think that's going to happen. So yeah, that's how I see the situation. And we do have NFP this week. If we go to this week, we have the NFP and the unemployment rate. So let's take a look at Kalshi, NFP, August. Can we get a prediction? May, no. Or maybe Polymarket, August 2026. Let's see. Yeah, we should. Okay, this should be it. So because the August print is essentially for July. So yeah, how many jobs are added in July? August 7th is going to be the date that the NFP comes out. No. So the highest percentage is 100K to 150K. So it's actually a strong print. Most people are expecting a strong print. Stronger than the forecast. Yeah, stronger than the forecast. And trust me, this is pretty reliable. If you look at Polymarket or Kalshi during election predictions, this is pretty reliable because it's actual real people putting real money on the line. Okay. Now the volume is pretty low. I'm not going to lie. The volume is only 23. The volume is only $23,000. Let me see the spread. Can we get the spread on this? The spread is super high. Okay, this may not be so reliable. Well, it could heat up a bit. Going into that event, it could heat up a bit more. So let's see, Kalshi, NFP, July 2026. August 7th. Okay, this is it. Volume is super low. Yeah, this is not going to be that reliable either. What is the highest prediction? Let's take a look. 100K or above. Okay, with a lower unemployment rate. No, sorry, 17%. Okay, so 50 to 99K. Well, I'll keep on monitoring poly market. Maybe we get some more volume into this. And check volume on poly. Well, it's low. Or am I missing something? It's only $23,000. It's pretty low. Yeah, basically this is low volume. But the way that you can trade it, let's say the volume was 100K, which would have been better, and always do check the spread. If the spread is 9.8 cents, that's way too much. 1 cent, 2 cents, that is much better. So the spread also tells you how reliable this is. So anyway, let's say there was 100K volume here. What you would then do is you would look at the highest percentage, 38% for 100K to 150K, which means the general consensus forecast is 85K. So the number that's more likely to come out is higher than the forecast and much higher than the previous number. I would say that would be very bullish for the US dollar, because if we open this up, actual greater than the forecast is good for the currency. So the trade right here would be going into Friday to buy US dollars. You can sell EU, you can sell GU. USD/JPY seems to be retracing a bit, so we could get sort of a pivot back to the upside, a bit of a reversal to the upside. This may not be such a bad trade if only there was greater volume and if only this signal from poly market was more reliable, which it's really not that reliable with that low volume. So that is one way. That is one way to trade basically news events, okay, or NFPs. You look at the poly market because it's supposed to be the most reliable indicator, and you look at the consensus. You look at the Forex calendar, and you look at the previous number. And then you try and structure a trade around that. We also have midterms coming up in November. Can we get poly market, or let's go to the search bar. US midterms. Okay, let's take a look. Republican sweep. So 2026 midterms, looks like we have 46% chance of a Democratic sweep. The volume is great here. So look at this, $10 million in volume. So this is a reliable signal. So yeah, you can try and structure a trade around this. Let's say if you know how the Democrats or the Republicans will impact the markets, you can do that. Personally, I don't have an edge here. I don't know how exactly that would impact the markets. But if I'm seeing this correctly, a Democratic sweep is the most likely, and looks like the Democrats have a good chance of winning. I know Trump loses a bit of power if Democrats come in, because the Republicans vote in favor of Trump's laws that he wants to pass. So I think this is a bit going to be a bit of a problem for Trump. Okay, news of a possible deal, nobody's buying it. It's just getting crazy. If you look at financial juice, breaking news, language has been drafted on a possible US and Iran deal. Like, we have been going through this for 6 months now, or is it 5 or 6 months, something like that. There's always a taco, always something happens, the deal falls through. Trump keeps on blabbing about the new deal, then there's no deal, then it's fake, it's just market manipulation. So I'm ignoring it. I'm focusing on the numbers, focusing on the data. And the data is telling me this. Let's try to see my Strait of Hormuz. Let's take a look. Okay, so the latest update is still July 23rd. This is highly lagging, but it's still closed. And I know it's still closed because look at the price of oil, which is still elevated and on a path to hit 100. Very likely to hit 100. So that's going to bring inflation. Everything that we consume, everything that we do is tied to the price of energy. And also, before I forget, let me send a link to James, who is coming on in 10 minutes, I believe. So let's send a link to James. Okay. Yeah, basically, I think inflation goes up, but then again, okay, James is gonna be a little bit late. That is fine. No worries. Okay. So let's open up Edgefinder CPI, 3.5%. So I'm expecting this to go up. I'm expecting inflation to continue grinding to the upside. Okay. That means the Fed should have to hike rates, but the Fed has turned super dovish. And last time that they hiked, inflation was running completely out of control at 7%. So I don't think that a hawkish Fed kicks in until we see 7 or 8% inflation on the CPI. So it's tough to structure a trade around that. A good play could be essentially, I'm betting on a strong NFP print. I'm betting that the CPI, which comes out next week, CPI and PPI, which come out next week, here's basically the trade. So if we pop it to the DXY, so buy USD into NFP, into CPI, and into the Fed event, and then immediately after the Fed event, sell USD and go risk on immediately after the Fed. That's how I'm seeing the situation at the moment. So you need to have a fast pivot. The Fed is most likely going to come out more dovish than people expect. But into the Fed, as Brent Donnelly calls it, the trade going into the Fed is to buy dollars and position risk off, most likely, because the market is still expecting them to do a rate hike. A rate hike is actually a very, very high chance of a hike. It's getting complicated. It's getting complicated. The easiest way, and it's never easy in trading, but the easiest way would be if the Fed was actually hawkish, CPI would be creeping up higher. I can just buy the dollar into NFP, into CPI, into the Fed, hold it, and make money on that. But yeah, it's never easy. So a little bit tough to structure a position currently. But I think buying the dollar into NFP and into CPI should be good. Max says, Marco, I'm going to do the exact opposite. Well, that's fine. That's why we have the markets. There's buyers and there's sellers. Max says, waiting for the NFP to short the market. Usually crash bet to curve on all-time highs now when trending lower. Okay, so you're waiting for NFP to go risk off, as far as I can understand. Well, or short on the US dollar. What I want to do is I want to buy the US dollar going into NFP, and I want to go risk off. So you can sell stocks going into NFP, and the NFP can come out stronger than expected, and stocks can sell off because a stronger NFP would make people expect a hawkish Fed. So stocks could sell off. I know it gets complicated, but yeah, buying back USD. Well, I have the same idea. I want to buy the dollar going into NFP. So I don't think we're on the opposite side. I'm not sure. I got a bit confused. I do want to mention, if you want to join the A1 Trading Discord, so if you want to join the A1 Trading Discord, you can join for free, okay? The link is in the description of this stream, and I will also post the link right now. So let me go to my stream links, copy that. In the comment section, you will find the link to join the free Discord. You can also become a paid member. If you want to get access to all of my trades, Chris Pulver, TraderNick, Iwind, Alan, you can do so by also clicking the link in the description and using the code Marco to get 25% off. Now, this code also works for the Edge Finder. So if you want to get the Edge Finder, code Marco gets you 25% off. Edge Finder, I use it on a daily basis. As you can see, I use it for my daily readings, inflation, NFP, anything that I need, top setups. If I want to get an overall read on the markets, overall read on an asset, that's what I use. Now, if you don't trust me, well, do check out the Trustpilot. Whatever you buy, always check the reviews before you buy it, okay? Especially in the trading niche where there's a lot of shady people. So A1 Trading, 4.8 out of 5, 242 reviews, see all reviews, okay? 5-star, check the ratios, 5-star, 4-star, 3-star, 1-star, 2-star, 1-star. Read the reviews, go through them, read the latest ones, okay? The reviews will tell you if the product is good or not. Join the Discord. You can join for free, okay? You can join the Discord for free, and you can talk to traders. A lot of people like the Edge Finder, and we haven't gotten any complaints. Like no one has had buyer's remorse because it's so good, and it kind of changes the game for retail traders basically, because the pros, they're using Bloomberg, but Bloomberg costs $25,000 per year. So for retail traders, there has been nothing of that sort. Well, now you have the Edge Finder, and you can finally compete with the pros. So code Marco gets you 25% off. I have 4 more minutes. Let's see what Max said. Max says, no, I'm going to buy USD after NFP. Oh, okay. Well, that sounds good as well. What's your take on SD Swiss longs? NFP will surprise to the upside, but if NFP does disappoint big time, then UJ shorts are also valid. Yes, but we'll see. By now, I don't really like risking any more on UJ, waiting for some consolidation in those zones. That's kind of what I'm seeing as well when it comes to USD JPY. This has been a monster move. This has been massive. It has been sort of a joint intervention between Bank of Japan and Scott Bessent. By the way, Scott Bessent leaked note. Look at this. So this is obviously staged. Can we open image in new tab? So this is obviously staged, but on the latest press conference, Scott Bessent, the Secretary of Treasury, wrote on a kind of a note to do buy Japanese yen JPY 5 to 10 bid. Now, as I mentioned, this is staged. No professional would do something like this. This was clearly meant for the reporters to catch it, to take a picture, and then post to the public. Now, it kind of seems like a charade. Do keep in mind, Scott Bessent was picked by Trump, and Trump usually picks people according to how they look and as if he was building a reality TV show. So I don't think he picks the right people for the job. I think he picks people that have theatrical, let's say, attributes to them. Yeah, this was absolutely staged. There's no doubt about it that this was staged. And like a professional at the top level, the Secretary of Treasury, to do something like this, it's completely unprofessional. And it's kind of a sign that maybe this won't be so successful, because it's like a clown that does this. A clown would do something like this, okay? A successful person, the Secretary of Treasury, that is successful in their objectives, would not do something like that. That kind of makes me a bit nervous, and it makes me think, well, maybe USD JPY won't drop much more. Maybe we just consolidate here. Maybe we just range around. Because now the public is seeing the note, and they're thinking, oh crap, they're going to intervene even more. It's going to be a bloodbath. Let me just sell USD JPY like crazy. Now, once the retail starts piling in, they usually get smashed. So if the retail is massively selling here, I don't want to participate in that any longer. That's my thinking. So it's a bit of a clown show, and a clown show is a good reversal signal. So maybe buying USD JPY could work for the short term. we're gonna have to take a look. Anyway, Marco, depends on the data. I just pre-planned. That doesn't mean I will. Okay. Has been proven to be real. Sounds AI. It's real. It's real. So I noticed that from a couple of other sources, and it is real. Anyway, I have ran out of time. James has joined the stream. Thank you very much for watching. If you have any questions, you can find me in the A1 Trading Discord, which you can join for free. You will see me in 2 hours on my second segment, and I'll play a short transition video now. Then you will have James. Okay? So thank you. See you.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Muted. My bad. Sorry, guys. I'll start again. How's everyone doing? Happy Tuesday. Hope you're all well. All good Mondays. Oh, it's so embarrassing when that happens. So cringe. Anyway, what I was saying, we'll cut to the chase. I am long dollar yen. I decided to go and buy it earlier. Was it yesterday? Yeah, yesterday-ish. I think it was late last night. So the reasoning is really simple, actually. So hold on, let me get my moving averages back. There we go. Yeah, so the reasoning's really simple. So if you've been watching my segments for, a little while, past couple of weeks, you'll know we've been talking about this 200 moving average when we have interventions on dollar yen, we have interventions on the yen. Dollar yen typically comes down to its 200. I decided to go long because I did not see a reason for this market to really continue lower. There's, as we said yesterday, nothing's changed. There's been no policy change. We had an intervention. Who cares? It doesn't mean anything. It's a little bit of it's just a way for policymakers to buy a bit of time. That's it. That really all it is. So it's just an opportunity to get into a really nice carry trade and a trending market at a pretty good discount. That's the way I see it. So there is arguments. Bank of Japan might hike rates. They very well could do. I released a video actually about an hour ago on my YouTube channel about the Bank of Japan and why they can't really save the yen. That's a little bit of a clickbaity title, but it is half true. They are in a very difficult position trying to balance the bond market and the yen. And I just don't think there's really anything the Bank of Japan can do to save dollar yen from going higher. They can defend 164. They could defend, they could actually start defending 160 again. Now we are below 160. So we could see ping pong. But, as we discussed yesterday, again, interventions are very expensive. It's not something that they will just continue to do because, they will just be burning money at that point trying to defend a very weak currency. So, yeah, I am long dollar yen. That's basically the reason why I'm happy to just keep selling the yen, collecting that positive swaps. I was also saying hello to everyone. Jeremy, Sluggy, Ray Beast, Christoph. Who else is there here? King of Kings. If I've not said your name, don't be offended. It's just because I know those names already. They're here often. So hello to everyone. Hello, James. Did I miss the Aussie US dollar position? I'm not sure, actually. I've not been on the chart. Since we spoke yesterday, I don't think I've been on the charts at all. So, yes, Christoph, we both missed this trade. in fairness, I was saying I wasn't a huge fan of it. In hindsight, that was the wrong call. Maybe I should have set an alert and taken the position. I don't really regret it though, because I still don't like it. Even though we've had a pretty good entry, you know, from the low to the high, we've had the pullback, retested the previous sort of support through here into the 50% retracement and 200 moving average. That all looks pretty good, but I just don't really like the look of this. So, you know, there's just not really a direction. The moving averages are pretty parallel to each other. There's not really much of an established trend here. So the H4 is not looking fantastic. The daily, however, does look quite nice here. So we do have this really nice trend line on the daily. We've rejected the 200 moving average. We're creating higher lows. So I think what I'm going to have to do here is actually alter the fib, because we've now got a new low. Look for a new high to get printed roughly around here. And the reason I'm saying here specifically is because if we do top here, the pullback would be in line with these previous highs, and then we could see a continuation to the upside. I think this is really the only way I can approach this market right now. So yeah, that's all I can do here at the moment. Gold market making style scalping. Oh, gold market making style scalping, only way to move. Money trading levels there every day. When there's low volatility, just increase your leverage. I mean, that's an interesting approach. When there's low volatility, I would say increasing leverage actually is one of the worst things to do. Just because when you've got low volatility, the market movements are going to be more irrational and just not great really for average retail traders that are scalping. So over leveraging, you're just going to get wiped out. If you're in a low volatility market, it's probably best just to stay away. Pound dollar pullback. Yeah, we are seeing the dollar pairs having a little bit of a bid today. Pound dollar hasn't met any criteria for me. We do have a pretty nice bullish trend that's established here on the H4. However, overall, we are still creating these lower highs on the sort of daily and weekly charts. So we are in this sort of, you know, wedge, if you will, or whatever you want to call it. And yesterday we did see a rejection of this same sort of level or zone or whatever you want to call it. And the pullback wasn't into the 50% retracement. So my criteria for an entry just hasn't been met. So I'm not really that interested in pound dollar. Although I've just noticed, actually, I forgot to pay attention to this, but pound yen is getting very bullish reading. Pound dollar's bullish, pound CAD's bullish. So we've got a very clear theme here on the edge finder. We really want to buy the yen. Sorry, not buy the yen, buy the pound or the sterling. So, oh, it's funny. I've just seen a message from Marco saying I'm muted. I need to keep Discord open when I'm doing these streams, because that's twice now I've missed messages. What was I saying? So yeah, there is a clear theme on the edge finder to be a buyer of the sterling, but pound dollar, I just don't really want to. So yeah, I think I'm gonna just stay away for now. Pound Swiss still looks good, but it needs to do something. You know, this is just horrible. There is nothing to do here. If you've been buying pound Swiss in these levels, you'll probably be very happy with this, because you'll just be getting paid swaps. So this is actually ideal for you, because you want the trade to take as long as possible to work out, because then you don't just benefit from the P&L, you also, well, you don't benefit from the R&R, you also benefit from the swaps. However, for me, I need to see this pull back into the 50% retracement or the fib zone and retest these previous highs. So again, break, retest, and continue. We don't have that. So again, sat on the sidelines. Excuse me. I'm in a funny position at the moment. I've got loads of, well, not loads, but I've got quite a few trades I do quite like the idea of, but I just can't get into any of them. It's a little bit annoying. So New Zealand dollar here. Actually, this is interesting. If any of you were here paying attention yesterday to what I was talking about New Zealand dollar, I said we've got two options here. We either come back into this level, or actually we just break and retest this level, which does seem like what's happening. Now, I'm not saying that to make myself sound like a genius, because this is actually not good for me, because I do need fib pullbacks, and this isn't one. A break and retest alone just isn't enough for me to do anything with. You know, it's not confirmation. I need to add in the fib. I need to add in the moving averages. So this is a little bit annoying. And the reason that's annoying is not just because there's no entry for me, but also because of the weekly time frame we were looking at. So, oops, hold on. There we go. God, you know what? I turned 28 a few months ago, and I can't use technology. It's crazy. I was trying to do something on my phone a couple of days ago. I just couldn't figure it out. I was sat in settings on Apple on my iPhone, I was scrolling for about half an hour, and I refused to go to Google to find out how to do it. Because, you know, when I was younger, it's like, I know where everything is and how to do everything on technology. These days, I can't do it. It's horrible. I feel like such an old person. But I really relate. You know, when I was younger, I used to try and teach my grandmother how to do things, or, you know, how to use a TV or whatever. I get so annoyed that they just wouldn't understand simple buttons, but I completely get it. You know, now I'm getting older. Anyway, I'm rambling here. So New Zealand US dollar continues to have this really nice smooth run to the downside. It's a very consistent type of pattern. So even if you don't trade trend lines, I don't trade trend lines, but as I said yesterday, I've gotten into a bit of a habit of actually just drawing them on higher timeframes and leaving them. I don't know why. I quite like the look of it. But either way, the 200 moving average here does reflect a very similar thing. So we're coming up to 200, rejecting, same thing here as well. So there's this weekly time frame that is proving to be a little bit of a problem, really, for any bulls. So what I'd like to do is, if I don't get into any long positions, I actually might look to fade some potential upside on New Zealand US dollar and sell on the weekly time frame, looking for a continuation lower. That could definitely be an idea. I don't want to do that just yet, because first of all, we're not at the right level to do that, or the right price to warrant that type of idea. But when it comes to counter trend trading, and I've said this a few times, I think we were talking about it on Aussie New Zealand as well a couple of days ago, about counter trend, because it depends what time frame you look at. It's quite subjective. You know, this, if I was selling this, I would be heavily with the trend. But of course, on the H4 and the daily, I wouldn't be with the trend if I was going short. So when I say I'm counter trend trading, I'm talking about my normal timeframes, which is the H4 and the daily. That's my sort of benchmark timeframes. So when I'm trying to get into a position that is counter trading, I have to really have something a bit more than just technicals. So it has to be, you know, edge finder or forward guidance from a central bank, just something to warrant me taking a position and taking the risk of going against the prevalent trend at that time. And right now, I don't have that, to be honest with you. So staying out. But yeah, we've got the same thing on lots of the Swiss pairs as well. We talked about it on Pound Swiss. I don't know if we did actually, but I have covered Pound Swiss a lot recently, so I'm sure you guys remember that one. And Euro Swiss also on the weekly is very bearish. So I think there are good opportunities for short-term long positions in these markets, but over the longer term, I would definitely be paying attention to the weekly and looking to take profits when we start reaching these different various sort of dynamic resistance levels. Definitely something to pay attention to. Now, New Zealand, Australian dollar, New Zealand. Let me just catch up with the chat. Hold on. Yes, I do see your point, James. UJ will just get bought back up unless the carry trade is killed. Yeah, for sure, Sluggy. That's absolutely it. There is no two ways around it. And again, I'm not going to go over it because I kind of covered the concept yesterday. I made a video earlier today on my channel, so I'm not going to do it again. But yeah, the BOJ is in a very tricky spot, and really the only thing they can do to defend the yen is hike rates, but they can't really hike rates enough to save the yen. So it's a really hard position. Put it this way, I wouldn't want the job of trying to manage the yen and the bond market over there. I think the stress would give me a heart attack. And to be fair, the Bank of Japan does seem to be on that trajectory. Maybe we'll see how it goes. But yeah, I think if the BOJ does commit to rate normalization, you know, when I say rate normalization, I mean bringing. Actually, let me use the edge finder to actually show you this. I can't remember where. Oh, here, interest rates here. So this shouldn't be new news to anyone. But yeah, we'll just use some majors here: yen, pound, euro, and dollar. So hold on, I'm just trying to see here. Interest rates historical data. Is this today, August? Yeah, okay. So what we can see, if I can zoom in. No, I can't. Okay, bit annoying. Anyway, what we've got here is the yen down here at 1%. So when people are talking about rate normalization, the whole idea is that obviously, and again, I know this is a very basic topic for many people, but for anyone that doesn't know, I am here for an hour, so may as well cover these various different things. Because the Bank of Japan has an interest rate of 1%, what people do is sell the yen and they buy other currencies. So like the dollar, the pound, the euro, but only any other currency really with a higher interest rate. So if the BOJ commits to closing the gap, the whole carry trade idea completely collapses. And the most likely outcome is that we see dollar yen, pound yen, all of these yen pairs have massive outflows or selling. And we see large corrections and maybe even a crash. I'm not sure how large it would be, but it would be significant to the downside. So that really is the only case where I can warrant actually having a significantly bear case, other than that, unless that happens, sorry. It really is just a case of buying the dollar, selling the yen. That's really as far as it goes. Again, that's all my opinions, my analysis, not financial advice. There might be someone 10 times more intelligent and has a better idea, but that's what I've got. Anyway, we're going to get back to the charts because, again, I don't want to bore you guys with information that you probably already know. So with Aussie New Zealand, what we have is a beautiful setup. We've got the weekly level of support down here that has now been retested as resistance. So we've been paying attention to this for a long time, probably the past 3-4 months, maybe. It's been a long time that we've been watching this level. So I was short not too long ago, maybe 1 to 2 months ago. I was shorting roughly around this area. I can't remember exactly where my entry was, but it was somewhere around here. I was really against the move here. Then it came into a roughly 1% profit, then came back. And I decided to just close the position at break even because it wasn't worth holding. It's a negative swap trade to hold short. So yeah, it wasn't great. And the consolidation made me really nervous as well. And the edge finder wasn't that bearish at the time. However, we've now had a bit more of a confirmation. So the H4 moving averages have crossed into a bearish trend, indicating we just have that confirmation that sentiment is bearish on the H4 at least. The daily is still bullish, but we are testing this daily level of support and we are very close to the daily 200. So we could see a break lower. And I'll get on to sort of the thought process behind that in a second. And again, we do have this weekly time frame rejecting a pretty major level of previous support. Then if we go back to the edge finder, we've got Aussie New Zealand reading bearish, right? Actually very bearish here with -8. So we know the fundamentals are bearish. We've got the H4 time frame that's bearish. We've got the weekly that's at or rejected a very strong key level. So the idea of why this market could continue lower isn't just the idea of the fundamentals are bearish, we go short, but it's also a mean reversion idea based on the range that we've had for sort of the past 12, 13 years. It really does depend on exactly where you draw it, but this was sort of established 2013, 2014, give or take. Since then, there hasn't, sorry, I'm trying to draw and talk and analyze at the same time. It's a bit annoying. Okay, so we've not managed to break out of this range that whole time. Every time we did come above, we just came straight back in. And this was a mean reversion traders or range traders dream. There was nothing else to do other than sell the highs, buy the lows. For 12, 13 years, all you had to do. But then we did get the breakout finally. And this was on the hawkish RBA when the RBA hiked 3 times earlier in the year. But now the RBA is on pause. We've got the fundamentals that have flipped. We've got the H4 that's flipped. So there is no real reason on the external side of the chart. So I'm outside of like the trend is what I mean by that. There's no reason that this market couldn't really come back down towards sort of the 1.4 level, maybe even the 1.1 level, and potentially lower if it ends up back at the low of the range. But this sort of mean reversion, I think, is quite likely. Obviously not guaranteed. Nothing's guaranteed, but I would put money on this. And that's what I'm waiting to do. I'm waiting to get into a short position if we can get the 50% pullback here. So, of course, fib from the high to the low. Actually, the fib needs slightly adjusting here just to meet the new lows. So fib from the high to the low, pull back into the 50% or the 61.8%, come towards the 200 moving average, and then continue lower, break this level, retest into the level, and then continue. Maybe the idea of actually scaling in if we do get a retest of this level and the break lower. So I think there's a really, really good idea here, but it's more a case now of just waiting for the entry and then does it work out, because the stop is really small relative to where we're actually targeting. So if I'm looking for the high of the range, so let's just say 1.13, this would be at least a 1 to 9.9, which is quite large, especially for the way I trade. Normally look for 1 to 1s, 1 to 2, 1 to 3. So 1 to 9 is significant. So if that works out, it could be huge. But again, there's no guarantees. So I'm just waiting for an entry to come. I'll execute and see how it goes. Let me just catch up with the chat again. Hey everybody, wish you all a blessed day. Thank you very much, Machiavelli. You too. I know I'm quite behind on the chat. I've been rambling quite a lot today. Low volatility is less risk for big moves. That's why I increase leverage. That is a fair point. I get what you say in digital content. That I do understand. But I think when we're talking, I mean, if you've got a strategy for it, that's fine. But I'm talking more of a general statement for most traders that do trade gold on, let's say, a 1 minute time frame, a 5 minute time frame. In a low liquidity, low volatility period, it's just going to whipsaw, really. Excuse me. And if you don't have, the risk management, the right stop placement, you are just going to get wicked out, taken out, stopped out, and it's going to be a bit of a mess. And if it works out, you might get into bad habits. Anyway, what's my take on Euro New Zealand shorts? That's a good question. We can definitely take a look. The thing is, I'm not really bearish on either of the euro or the New Zealand dollar. So yeah, we'll have a look at this one. GBP AUD is making a rejection of the fib at the moment. Okay, we'll have a look at Pound Aussie as well then, Christoph. Long-term trend is bearish, but it doesn't matter for our position. Yeah, no, you are right, Slugger. I'm assuming you're talking about the other markets on the weekly. Caught New Zealand US dollar buys. I believe in the concept of waiting patiently, buying low, selling high, and holding for months or a year. Interesting. So you're going more with a... Yeah, it's more of a position approach rather than swing trading. Because someone linked me James's account. Yes, if you, I think I'm not sure. I don't think the A1 guys are in, so I'm gonna have to do it myself. Hold on. So, there you go. I've just dropped it in the chat. I hope the A1 guys don't mind, but I don't think there's anyone else here to do it. So it's Forex James XXS. What else was being said here? Nasdaq. Yeah, we take a look at Nasdaq. Dumb question. Why doesn't US dollar Swiss behave like US dollar yen? Both S&B and BOJ rates are below. So the Swiss is different to the yen. The Swiss is a very stable currency. It's not in the same position as the yen. So as we discussed with the yen or Japan or the Bank of Japan is in a very difficult position because they largely import a lot. So their weak currency is not just a case of, oh, they need to hike rates. It's also actually affecting the economy of Japan. There's lots of other components. I'm trying to, again, sort of keep it simple and brief, but that's basically it. It's just because they're not the same. Yes, they've both got low rates, but there's much more context to it behind that. So what we're looking at, so we'll go over New Zealand, Euro New Zealand, then we'll do Pound Aussie, then we'll do Nasdaq, and then we'll do Aussie CAD for King of Kings. And apparently oil's dumping. Let's take a very quick look at oil, then we'll get back to the markets we just said. Yeah, oil's not having a fantastic time at the moment. I mean, it's not doing anything, to be honest. We've not seen really any development for the past couple of days, but yeah, we'll see. So, Euro New Zealand, what do we have here? We actually, interesting, I didn't see this. We do have a very bearish reading for New Zealand, Euro New Zealand, -8. So I guess I would be actually looking more towards being a short seller. So we've got a very clear level of support that we're coming into at the moment. Looks like we're about to break it, to be honest. With just the way this candle is looking at the moment, it's not looking great for the buyers. We do have a moving average cross here on the daily, just indicating a bit of a trend change here. The H4 is bearish as well. Okay, so how do we approach this? So fib from the high, and in this case, we can't draw, or I can't draw the fib to this low because this is a higher low. So it doesn't really work. If I'm looking to sell, I can't use a higher low. Does that make sense? Because that's more uptrend type of behavior. So I'd need to see a new low get printed. So actually, sorry, I'm kind of thinking out loud again. I've not checked this market. So it'd be actually maybe something a little bit more like this. It would really depend. I need a bit more, development to see what's going on at the time to determine where the fib is actually drawn from. But fib from the high, we'll keep it, bread and butter for now. Wherever the next low we printed, some sort of retest into the previous lows on the left, pull back into the 50% retracement, and then a continuation lower. Again, edge find is bearish, trend is bearish. We're about to break, or looks like we're about to break this major level of support. So this is how I approach it. We get the break, retest into the fib, continuation, edge finder aligns. Super simple. So yeah, that's Euro New Zealand. Let's just take a quick look. The weekly is bullish, but I'm not really seeing too much other than maybe this. Again, it is a very major level. So maybe we might see a bounce. However, I'm not really a fan of that. I do think downside is a little bit more likely, to be honest. This just looks a little bit too elevated. So the fact that we came up with no pullbacks, this is a very aggressive move to the upside. We came back down. We did retest this level, had the chance to continue higher and failed, came back down again, had another chance to continue higher and failed. And now it looks like we are going to break lower. So excuse me, I think maybe some sort of short position, either back in towards the 1.86 level, or if you're a little bit more conservative, actually maybe the 1.9 level, expecting sort of the 200 moving average to act as dynamic support and continue from there. So yeah, that's how I would approach Euro New Zealand. Oh, my camera's gone off. I just realized. Hold on, let me see if I can fix that for you. Bear with me for 1 second. Let me just see why that's happened. I might have got a call or something. Everything seems fine. There we go. I think we should be fixed now. When it unfreezes. If it unfreezes. Sorry, guys. Technical difficulties today. There we go. We're back online. Okay, that should be fine. We're good to go. Right. So what was next? Pound Aussie for Christoph, I think it was. Pound Aussie, let's see. So he said a 50% retracement. What did he say? Yeah, 50%. Christoph, are you looking to be a buyer or seller? I'm assuming a buyer because we'd have to draw the fib like this. Actually, maybe a little bit higher. I move this to the low here. So yeah, I mean, technically, actually, this looks really nice. We do have, again, the break of previous structure on the left, retest. I mean, higher high, but then we've come back down to make equal lows inside the fib. It's not a trade breaking idea, but it might be a little bit of a problem, the fact that we couldn't create a higher low from this point. Let's just see, what's the daily doing? The daily is still quite bearish. Again, lower high relative to the previous high, but we are creating these higher lows. So I would say there's a little bit of indecision actually in this market, just from the technical side. Slight bullish reading here is 4. That's not really enough to get me interested. I need to see at least a 5, just because 4 is too close to be neutral. 1 data flip and the trade is kind of over, fundamentally speaking, on the edge finder. And it has lost 5 of its points over the past 24 hours. So I'll be honest, Christoph, I think the technical setup is good or decent, but I just don't think there's enough to actually warrant the position in my view. What was the other one? Was it? Okay, so Nasdaq and then New Zealand dollar. Okay. Yeah, so I am in Nasdaq actually. I forgot about this one. Yeah, really not looking good. So I'll be honest, I don't think there's much for me to go over here. We are obviously in a bullish trend here on the daily time frame. We've rejected around the 200 daily moving average, not perfectly, but we did come down to it and very quickly sort of rejection back to the upside. The Fed not really having any forward guidance for us is a little bit of an issue. I think that we are seeing support on the back of that. The fact we're also seeing oil prices down as well is quite a big support. I'm fairly sure the stock market's been doing quite well with earnings. I could be mistaken. Again, as I always say, I don't really pay that much attention to individual stocks, but I'm fairly sure earnings have been pretty good, generally speaking. So the short position I took here was when the edge finder did have a bearish reading on the Nasdaq. We came down, broke the level, came back up, retested previous structure on the left, back into the fib. So I was looking for a continuation lower, and the H4 was bearish. So the setup was fine at the time. One of those things doesn't work out. So I think from this point, what would I need to see? I think I just need to see some of these highs get cleared out, some sort of higher high get printed, pull back, and then I would look to enter on wherever the next pullback will be. So that's kind of the idea I've got right now. But yeah, I can't really do much at the moment. I just need to see the market continue higher, new high, then new low, and then we can assess from that point. It's just a bit too early for me to really give you a solid idea. So Aussie CAD. Is there an edge finder reading? I don't think there is. No, so there's no edge finder reading. And I'll be honest, this gives me a little bit of the spooks just because we've got the weekly level of resistance here. So it doesn't mean it can't break higher. It definitely could, especially with oil coming down. We could see some Canadian dollar weakness. We could continue to see the Australian dollar do pretty well, stay stable. So I would say fundamentally, I would lean a bit more to the bullish side, but I really wouldn't want to be a buyer of this. And even if we did get the technical setup, there is no fundamentals to really drive me into the trade. And then if we do actually go back to the technicals here, there isn't a whole load of room to the upside. So we've got a really close level here. Beyond there, we've got these highs. And after this really strong bullish run, I don't really like the idea of this. I think we are in for a little bit of a pullback here. Where it will be, I don't know. But it just looks a little bit overbought. So yeah, I would stay away from this one personally. Do you think it's ever justified to expand the stop loss during a losing trade? That's a really good question. Generally, no, I don't think there is. I would say there's probably an exception that I just can't think of right now. But yeah, no, I really don't think so. I think I think the best thing to do is just leave your stops alone. You came into the market with your stop loss in place for a reason. You know, your stop should always be somewhere that makes sense. So let's say we sold here, just for argument's sake, with a stop loss here. The stop loss here is for a reason. You know, it's because we previously topped out at this level. If it breaks higher, the likelihood is we continue higher. So that's why the stop would be there. Again, hypothetically, I'm not actually taking this trade. So if the market came up close to the stop, why would I move it? That doesn't make any sense to me. Because then the criteria I had going into the trade is broken. So following the rules, you should be out of the trade. Does that make sense? Again, I think from a professional side of trading, you know, if you're looking at budgets, exposure, risk tolerance, you're trading more of a macro side of things, you're more of a bit of a layered approach. Yes, there is arguments to be sort of adjusting stops as needed because you then have a full, coherent and educated understanding of risk management on a deeper level than just stop losses. You know, it's about, again, exposure, margin, all sorts of different stuff. So I think in that case, yes, but again, that's much more of a professional level. I just don't think is necessary as retail traders. We don't trade like that. There's no need for us to trade like that. So anyway, we'll move on. Regarding US indices, the best way is to keep updated to W. I'm not sure what that means. Thoughts on Nikkei, Nasdaq, Nikkei? Okay. Please stop where the charts tell you your idea is wrong. That's exactly it. Yeah, 100%. That's the correct way to go. Because there is also the idea, and this is the last thing I'll say before I go back to your chart request. There is the idea that, you know, let's say, again, let's just use this as an example. Let's say Aussie CAD fundamentally is very bearish. There is just no fundamentally given reason for it to continue to rise. That doesn't mean it can't rise. We can still see the market go higher and then maybe drop here, you know, for example. So, you know, if that was the idea and you were certain the fundamentals are right, you were, let's just, again, hypothetically say you were super, super knowledgeable in fundamentals. It was just an ultra bearish case. Well, in that case, the stop should still be hit. There's still no reason to move the stop because then you just get a better price, new stop loss, new trade, and you go again. Again, I just don't really see a reason for the average trader to be moving stops. Okay, so the Nikkei, I'm also short on the Nikkei, which isn't looking great at the moment. I'm on a little bit of the bad side of the market actually at the moment. So I went short on the risk assets, so the Nasdaq, the Nikkei. Again, the Nikkei I would say is a little bit more valid than the Nasdaq. The Nikkei is still bearish on the edge finder. The setup was still pretty good here, you know, break of the previous lows, retest into the level, into the fib as well, bearish trend on the H4. Both trades, in my opinion, are justified. They're fine. But yeah, just one of those situations, unfortunately. So I still wouldn't want to be a buyer. And the reason is because the trend is still bearish. We're still seeing, you know, consistent lower highs getting printed in the Nikkei. And we do have a very bearish reading here on the edge finder of -10. So overall, I do still remain on a bearish side, but longer term, I would still be very happy to buy. I don't really see a long-term thesis to be short the Nikkei, unless we do get some crazy BOJ hiking cycle, which I don't really see is a likelihood right now anyway. So yeah, I mean, this is kind of what I was talking about when we've been talking about the Nikkei for probably the past 2 weeks. And what I was cautious of is basically what is looking like is happening now, where we come up, get deviated or a little bit too far away from this 200 moving average, like what we saw happen in these 2 times. And then we just have a pullback on the daily. So, on the H4, the 1 hour lower time frame wise, the trends change and it looks like a great short setup. But overall, on higher time frames, it is still a very bullish trade. So it might be what's happened here, where we just got too deviated from 200. We have a bit of a mean reversion or pullback, and then we are just ready to continue higher. That's absolutely a possibility. But again, that's just the technicals. If we also account for fundamentals, I do still see short as the base case, but could be wrong, of course. Regarding US indices, is to keep up with Trump's latest comments, and people are making money out of that. I don't know if I agree with that. I think, if you're a scalper or even a day trader, or you've got algos, then yes. But I think for swing trading, it's not a necessity, because I'm just trying to think how to word this properly that kind of makes sense. So Trump's tweet, you know what? Yeah, I don't really have anything else to say on that. I think, yes, you are right, Tatiana. It depends on the severity, I guess, is what I'm trying to say. If it's just, one of his tweets about a stock, for me, that's completely irrelevant. I don't trade stocks, so I don't care. But yes, you are right, generally speaking. Sorry, I was making that overly complicated for no reason. That's my fault. Japan 225 for a sell. Yes, that is the current idea. So we'll see how it goes. Chance for US dollar CAD long. Yeah, maybe we can take a look at that one. Bitcoin. Yeah, we'll take a look at Bitcoin. Then we'll move on to dollar CAD. Just give me a second here. Just need to wet the whistle. Right. Bitcoin. What's going on here? Yeah, it's just a bag of nothingness like we've been looking at. So I'm not going to spend long on this, because it's the same thing we've been saying for the past, 1-2 months, maybe a bit longer. Technically, this looks like a good area for buyers to step in, just because it's a really obvious level. It's a pretty good discount from, actually, what is the discount? So right now, we're on about a 50% discount from Bitcoin's previous high, or its all-time high. Financially speaking, that is a good discount to buy. And again, we are at a pretty decent level here. So that makes sense. But I don't really know Bitcoin very well. I'm not a crypto trader, so I don't know like all the inner workings and what drives it on really at all. So I wouldn't feel comfortable sitting here saying it's bearish or it's bullish, but I can just give you what I think of the technicals, and we'll take it from there. So if we do look at previous crashes, they range from about 55 to 80, maybe even 90%. They're pretty large swings. The current move in Bitcoin is about 50 to 60%, give or take, or 50 to 55%, sorry. So if we take the lower end of Bitcoin's previous crashes as an average, we could end up maybe around 60%, maybe a little bit higher, around 70. That would give us around 40 to 30K on Bitcoin. But again, is that going to happen? I don't know, because someone raised a point, I think 2 or 3 days ago, maybe last week, that I didn't think about, and it is a good point. The Bitcoin's market cap has significantly increased. So does that mean the crashes are actually going to be smaller? Well, yes, likely. It's like in penny stocks versus mega caps. It's like you don't expect Apple to have the same swings as a penny stock, or even a small cap. So it's the same sort of idea. That's what I mean by that. But the other thing that, and this is the last thing I'll say about Bitcoin though, if we were going to see Bitcoin reverse, I think we might have seen it by now. It kind of feels to me like we do, or Bitcoin is ready to break lower. So the fact we came down over here and we've been consolidating around this area, and we did attempt to continue higher at this point, then used the 50 weekly moving average and the 200 daily moving average as resistances, it just doesn't feel good. I really don't like the look of Bitcoin at the moment. It just looks a little bit iffy. So yeah, I'm going to leave that there, make your own case for that, but I'm not very optimistic. I do think Bitcoin is bullish long term, but right now I wouldn't feel comfortable being a buyer or a seller, to be honest. So dollar CAD, okay. Yeah, so I was looking to potentially be a buyer. Well, I was looking to be a seller and then a buyer of dollar CAD at different points. So what I was looking at previously was this sort of pullback. So I wanted to see a 50% pullback from this low. We didn't quite get it, and I didn't really like the trade anyway. So I didn't take it. And the reason I didn't really like it and didn't take it is because of the daily time frame. So the H4 looked bearish. The edge finder was bearish. It was pretty good, but the risk reward potential just wasn't there. So, you know, if I think it was roughly around here, I was looking to enter. So stop loss would have to be here. Take profit would need to be around here. Actually, I think the entry might have been a bit lower. Anyway, I can't remember the exact position, but we were looking at around a 1-to-1 to 1 to 1.5. And at the time, I just didn't really see the dollar being that bearish. So I stood away from it. And then the daily time frame here is bullish. We've got the two previous daily highs here that could act as, you know, the break, sort of retest and continue higher type of action. But the fact that we're not really seeing anything on dollar CAD at the moment, you know, it is pretty sideways. We're not seeing a trend to the downside here on the H4. We're not really seeing much of a move to the upside either. Doesn't give me much of an indication. And the fact there's no edge finder reading, I think, for dollar CAD, yeah, there is nothing here. It just kind of tells me to stay away. So yeah, I don't really know what else to tell you about this one. It really is just a no trade market for me. Maybe if we came down to this level and showed some sort of rejection, I could maybe then warrant taking a small position to the long side, mainly on just a price action trade and trend following. But other than that, there is nothing here for me. I was betting on bounce from low. Do you mean this low here? I mean, you did get a bounce, but it depends how much of a bounce you were talking about. US dollar CAD will have clear direction after Friday's data. Yes, we do have NFP coming out this week, so it should be interesting. I'm not sure it's enough to save the dollar. So, you know, the dollar is definitely not looking great right now. Let me change this back to candles. Yeah, the dollar's definitely not looking fantastic. And as I said, I don't think Friday's data or this week's data in general is enough really to save it. I think the main focus is inflation. I think we've got to see inflation heating up, and that would be sort of the final thing for the dollar to continue higher. So we'll see. You know, I could be wrong. We could see the labor market heating up, but I wouldn't really expect that, to be honest with you. I'm just seeing if there's anything on the price action side that's interesting here. I suppose we could maybe, you know, make this box a bit bigger. You know, the previous low over here, previous highs, we've come back down. This could be a break and retest. Maybe there is that type of idea where actually the dollar is a pretty good buy position from here. But again, I don't really have the data to warrant that position. So if we look at the US heat map, we can see the dollar is just not in a good position at all. It's down at 40%. So jobs have been, or labor market data has been missing, specifically on NFP and ADP. PMIs disappointed from forecast. Not PMIs. Manufacturing came out yesterday. Manufacturing was okay yesterday, actually, but services did undershoot on the previous release. We do have services tomorrow, I think, if I remember correctly. Growth, not great. A pretty big miss from its forecast. And we did see inflation cooling off a little bit in the previous release as well. So as things stand right now, I don't see a reason really to be massively bullish on the dollar, but I also don't really want to be very bearish. I'm happy to just sit on the sidelines and see how it goes and what the data prints and make a decision from there. Okay, right. We've got about 15 minutes left. Hold on. So pound yen actually does look interesting. So pound yen might be another one. So I am, as I said, in dollar yen. So I need to be very careful. I don't want to get overly exposed just in case something happens. But pound yen looks really good here. There goes oil. Have I missed something? Oh, wow. Yeah, oil is moving. Yeah, interesting. Was there a headline? Let me just have a quick look. No, I don't see anything. Yeah, no, I don't see anything. So I'm just reading here. Bank of Japan will do what is needed on yen intervention. Yeah, okay, nothing for oil, I don't think. At least I don't have anything for oil. So back to pound yen. Where's it gone here? Yeah, so pound yen, I do really like the look of it on this daily time frame. We came down to the 200 daily moving average. The RSI is a bit oversold. And as we spoke about earlier, the carry trade is still alive. So I do like it. And I'm happy to stay long. I'm happy to stay short on the yen with dollar yen, but I don't want to put too much risk on the line just in case something happens. I really don't think it will. But it also wouldn't be a huge shock to me if we do get another intervention. So we have like 3 consecutively. And again, that would buy policymakers in Japan a bit more time to just allow dollar yen to climb his way back before they then have to take action again. So we'll see. But again, as things stand, I do like it, but I'm just taking a very cautious approach with the yen. So I'll stay long dollar yen. I'm going to keep pound yen in mind, but I'm probably not going to take it. So we'll see. I'm also just looking at this. I've just seen this previous lows here on pound yen. Looks like we're having a bit of a bearish candle here on the H4. This maybe could be a bit of more of a break and retest. I'm not saying it is. I don't know, but just again on the technical side, previous lows on the H4. We've had the moving average cross. We're seeing a bit of a bearish candle here. We could maybe see it lower, but I'm not gonna trade based on that. U.S. Treasury Secretary was, we may have an Iran deal tomorrow to open the Hormuz. Okay, I see. Yeah, I didn't see that one. Hold on. Right. Yes, I see. Okay. Just a minute ago. Another unconfirmed news, of course. Hopium. Shorts, a couple of hundred. Shorts on what ball out? Okay, so we've got a maybe opening of the Hormuz Strait. So yeah, we'll see. Again, I don't trust the headlines because we've had so many headlines come in and then so many headlines get corrected or wiped out, just changed. So it's very easy to sit here. Yeah, oil's down. We just had this headline come out. Okay, cool. But then, what are we going to get in the next 24 hours or 48 hours or even over the weekend? So, what can we do? It's a difficult situation to be a trader at the moment, I think, or a difficult environment, I should say. So in terms of positions, we've kind of gone through everything that I'm watching. So pound yen is a maybe, sorry. Pound US dollar, I like it fundamentally, but technically I don't really see anything that would warrant me getting into a position. Pound CAD, interesting. I didn't see pound CAD earlier. What's going on there? Actually, this doesn't look all that bad. Let's just see. A little bit of a discretionary fib drawing, unfortunately. We've got these kind of micro lows, so it really depends where you draw it from. So in this case, this low does fit, but again, it's a little bit of a discretionary drawing. So, take it or leave it. However, with that said, we do have pretty nice structure on the left just to sort of confirm that fib zone a little bit more. We've had the break of that level, retest, edge finders bullish, the trend's bullish. You know what? Maybe pound CAD actually is a pretty decent buy here. Unfortunately, the entry would be a bit late. I would have rather gotten in down here. So that's a little bit annoying. Let's see. I'm just thinking out loud, by the way. Again, I've not checked this market in a long time, so kind of just doing my reanalysis process. Excuse me. So yeah, I think all I can really see right now is actually an entry towards the market price. Maybe if we could see a bit of a pullback over the next couple of days, something like this, that might be a bit more ideal. But whether we'll get that or not, I don't know. I'm not sure I would really be willing to wait for such a small pullback and then potentially miss the rest of the move. So it might be and I'm talking for me, not for you. This isn't financial advice. But for me, it might be an idea of actually entering this at half risk. And if we do see a bit of a lower move, I could put in the other half risk and then look for that continuation. So I'm going to add this to my watch list because I do really like it, but I'm just not that happy with the entry. It's a little bit too high, but it's definitely one I like. New Zealand US dollar, not great. Pound Swiss, yeah, as we said earlier, Pound Swiss does look really good on a daily time frame, but again, we're just not seeing any development here. It's just sideways. So I can't do anything there yet. I just need to see it move a bit lower into the fib. We are seeing these yen pairs quite bullish, though. Again, pound yen's bullish, Swiss yen's bullish, New Zealand yen's bullish. So we do also have that to back up those yen short ideas on the yen pair longs. What else we have? The UK 100. I was looking at that a little bit last week, but I kind of just keep removing it. I don't really like the UK 100 or the FTSE. Yeah, so you can see I do need to re-add it. Actually, I'm not sure why it's disappeared off my list. There we go. Yeah. So I do like the setup, the fundamental landscape. It looks good. I just don't like the FTSE itself as an asset. I don't like the way it moves. The price action typically is quite choppy. However, we did break above the previous highs. Currently looking for a retest of about 50%. That would, again, retest these previous highs, break and retest continuation pattern. Edge Finder's bullish. I think this is really good. The trend is also bullish on the H4. Everything aligns. It's just, yeah, again, need to wait for some sort of entry to pop up. At the moment, I don't have one, which is a bit annoying. What else is there? I'm going to skip the yen pairs because we've already looked at dollar yen and pound yen. I don't really have anything else to say about the yen, so we'll skip those ones for now anyway. The Dow is bullish with a score of 5. Maybe the Dow is something to pay attention to. Let's see. Yeah, so the same headline, US Treasury Secretary, we may have Iran deal tomorrow to open the Hormuz. Okay, who cares? The news is out. Goes to react to oil of $3. Hello, James. Simo, hello, good to see you. Caught crude, couple of shorts, 100 bucks quick, left spawn. Very nice ball out, good stuff. Haven't been in crude for a while. Yeah, I've not traded oil since, well, actually, that's a lie. I did take a long position on oil, got stopped at break even, and then it ran to $90. So that was a bit annoying. But since then, I've not touched it. Also, the Dow is having a fantastic move in the pre-market. Wow. Yeah, I'm guessing there, excuse me, I'm guessing there is a bit of hopium in the market then. So, I mean, this one's actually quite simple. I would just be looking for a pullback into these previous highs and look for a continuation. I don't think there's really anything else to talk about. Unfortunately, I don't think there's going to be a fib retracement here. There might be, actually. Let me just double check. There is actually, I'm completely lying. There is a really good 50% retracement typically. However, that's assuming this is the peak. You know, if we continue to run higher throughout the day, we might end up with something a bit more like this. I don't know, but either way, I would be looking for a retracement back into this level to then maybe continue long. So I'm going to set an alert here because I do really like the idea of being a buyer of the Dow on a pullback. There we go. So again, I'll add this to the list. And right here. Okay, perfect. We've got some pretty good trade ideas in the pipeline. So Aussie New Zealand shorts looking really good if we can get that entry. Why am I on the 1 hour? Hold on. I didn't realize on the H1. Oh, well, the Dow still looks good. I didn't realize on the H1, so maybe the move looked a little bit larger. I thought it was on the H4 like I normally am. Either way, still a very good move on the Dow. So Aussie New Zealand shorts look fantastic. FTSE longs look okay. Not amazing, but okay. US 30 longs, maybe if we do get that type of pullback. I'm not sure we will, but there is the idea there. Pound CAD, I really like this one. Again, I will likely get into this one after the stream. Euro Swiss, I don't like this one actually. I think I'm gonna sideline this one. It's okay, but the fact that we came down to the fib, I already missed the entry, but also the fact that we created this lower high just doesn't look good to me. Normally, when I see a fib pullback, I want to see a follow through and straight away create the new high. When I say straight away, I mean without having a lower high in the middle of that. So the fact we've got this lower high just doesn't feel good to me. I don't like that. New Zealand US dollar looks good actually where it is, but again, the upside here for me just isn't there. My target would have to be the sort of blue sort of trend line here on the weekly. So again, I'll show you that one for anyone that's new. So yeah, this is what I'm talking about when I say the target. So just following this weekly time frame, we are obviously creating these lower highs, lower highs, lower highs. So I don't want to hold, excuse me, I don't want to hold this trade for too long. I'd rather just cut the trade, but that means the upside is very limited given the current price of the market. So yeah, it's okay, but definitely not there. Pound Swiss looks good, but again, consolidation, so I need to wait for a pullback. Aussie US dollar. Yeah, so Aussie US dollar is a little bit annoying because it did give us this pullback that we were looking for yesterday into this 50% retracement, but I didn't like the setup. It was just a bit too messy with the parallel Fibonacci, parallel moving averages. I didn't like it. So what I'm going to have to do is wait for a new high to get printed in this market. I'd take obviously the fib from the new low where it is to wherever the next high will be, and then reassess. Can we see a pullback from there and a continuation? And pound dollar is very similar to New Zealand dollar in terms of the target just isn't really there for me. Basically, sort of daily and weekly, we're creating the, again, similar to New Zealand US dollar, lower highs getting formed. And again, we actually did just create another lower high at the trend line. So it doesn't look great. I think better opportunities like the markets we just discussed. Okay, S&P is also breaking. Yeah, we are definitely seeing some reaction off that headline then, aren't we? James, really quick, gold looks like it's trying to break out. Yeah, the gold will be very happy about that news. The problem is gold needs a lot more to warrant a breakout. Oh, sorry, not to warrant a breakout. It needs a larger move, technically speaking, for a breakout to occur. So, you know, we've been just sideways for quite some time. So it needs to break the high at 4,200. And then maybe we could consider that a breakout. But then the next problem is we're coming straight into the daily 200 moving average. So that could also then act as a bit of a resistance. So I think gold, the idea is there. You know, we've got the weaker dollar. We've got a positive headline that came out. There is the idea of being a buyer. But I just think that it's a little bit premature at the moment, really. James, really quick. Oh, wait, that's the same message. James, what's your YouTube channel? My YouTube channel is Forex, James. I'll drop it in the chat again. As I said earlier, I don't think there's any A1 team here, so I'll do it myself. There you go. I just put it in the chat for you. Okay, so I'm just thinking I've got... Oh, only 3 minutes left. Oh, never mind. Yeah, there is A1 guys here. My channel's just been dropped in chat. Thank you, A1 people. Okay, so I don't think, as I said, I keep repeating myself, but I don't think there is anything left to cover. We've gone over a lot of different markets today. We've gone over different trade ideas. The trades I'm already in. We had a little bit of a look at talk about the BOJ. So yeah, I think we're pretty much done. And we do have Alan coming on in about 2 minutes. So what else is there? Ballout says, James, here's a good one for you. Nat gas all the way until the end of the year. Remember that last year? You know what's funny? The A1 guys added nat gas, and I made a reel. I need to edit it, unfortunately. I made a reel talking about nat gas was actually bearish, so I might trade it for the first time. But typically, it's gone off the edge finder. But it's still a good little reel I'll post today or tomorrow. Anyway, sorry, that was a complete tangent on what you actually said. So nat gas all the way until the end of the year. Yeah, so this was the idea I was looking at on the daily. You know, rejection of the. Why does that keep happening? Hold on. Right, rejection of the daily 200 moving average. I was looking for a fib pullback here on the low, but so far we've not got that. So Ballout, you're looking at a long idea, is that right? The thing is, I don't know really anything about nat gas to really tell you anything, but so July, August period was here on that gas. So yeah, Ballout, you are right. So right here, this was, I guess, when we were talking about it last year, and we did see large upside. So maybe there is an idea of a bit of a historical type of play where we come into these lows and actually we do have a rocket on that gas into the end of the year. I'll have to have a look. I've got a commodities trader on my team, so I'll get him to give me a bit of source, Ballout, and see what, you know, anything else going on there. My view on Nasdaq. So we've discussed Nasdaq quite a lot today, my friend. Overall, I would lean to the bullish side at the moment. I was actually I've probably been stopped out. Let me see. I'm going to assume this position's over now. Yeah, almost. So I'm actually still in a short position. So I would now pivot towards being long, just because we're breaking above the 200. My entry didn't hold with the previous daily support in the fib. We've had positive headline. The Fed forward guidance has also bolstered the US markets. So for me to actually get long, I would need to see these highs start getting broken, then some sort of pullback and continuation. Then I could enter on the pullback here. Obviously, visualization purposes, I'm not expecting price to actually do this, but yeah, right now I can't really tell you anything because again, I was short. It's clearly not worked out. So now I do lean a little bit more long, but I need to wait for something to solidify me actually getting into the trade, whether it's the edge finder flipping bullish or a technical setup, something happening. But yeah, right now, nothing going on here. Ball out, you're buying. Fair enough. Yeah, it wasn't the best trade, but yeah, that's trading. Some work, some don't. It is what it is. Okay, so yeah, ladies and gentlemen, that wraps up my segment for today. It's been great talking to you all. Hope you all have a fantastic rest of your days. I'll see you all tomorrow. Don't go anywhere. We've got Alan Perez coming to take over the stream. Stay safe. Don't get margin called and enjoy the rest of your days. See you later.
Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching. Like the ad said, go ahead and check out ACAP. They're offering a 20% welcome bonus for a limited time. So if you are in the market looking to switch brokerages, ACAP is a phenomenal option for everyone that is not in the US. But good morning. Hope everyone is doing fantastic. Right as I'm hopping online here, it seems like we did have a little bit of inflow of very, very interesting news here. So on the Strader Hormuz Middle East side of things, you had Besant saying a deal is possible Tuesday or Wednesday on Hormuz. So potentially today or tomorrow, which is big. In fact, I haven't really looked at oil prices to see if it's really reacting off of this. Let's see here, down 3.5%. So that's definitely going ahead and moving the market. Positive development there from Besant. And then another one that he said actually was right before I came on here. Besant on yen intervention, basically saying the U.S. will do whatever it takes to support the yen. So they're double whammy there, trying to address the Strader Hormuz, the Middle East stuff, and also addressing what's going on with the Japanese yen. So very, very bearish day, I would say, for DXY, right? Especially if you have yields following suit with that, with oil prices, that will definitely continue to hurt DXY. And then, of course, Japanese yen continuing to fall lower. So very, very interesting stuff that we got going on. It's going to be a very good session here. We do have Nasdaq here up 1% on the day. We're having a lot of we have this level here that I'm watching here on Nasdaq. So let me go ahead and extend this trend line here, and we're going to make this a 2-pointer. So we're going to make this a solid line 2-pointer there. You can see here that if we go down to a 4-hour chart, the Nasdaq has been respecting this lower trend line here. You can see that we tested it here once, twice, 3 times. You can maybe call that 4 if you want to. We are here on the 5th time here. So we'll see if this is actually a breakout to the upside or if NASDAQ goes ahead and rejects this level and then we find our way back here. I'm interested to see what happens. I would imagine that with this risk on move right here, or this risk on activity, that we actually do see a breakout to the upside. So I'm curious to see if that actually does play out or not. When it comes to the S&P, very, very strong here today. Are we at all-time highs? We're at all-time highs. So all-time highs there on the S&P 500. So very resilient market here. We had a strong manufacturing yesterday as well. And all eyes now are on non-farm payrolls. We have unemployment claims, I think, today as well, if I'm not mistaken. Let's see, unemployment. JOLTS job openings today at 9 a.m. So we'll see what happens. But Very risk on day, I would imagine. Good morning, Ball Out. Good morning, Cheryl's, KDX. Hope you guys are doing awesome. Good to see you guys. Let's see. You guys are talking about natural gas. I know Ball Out, you love natural gas, don't you, man? What's it doing? I know on the Edge Finder, it is actually getting some reads to the bearish side, if I'm not mistaken. It's getting a neutral reading right now, but it was bearish at one point. Yeah, natural gas. I don't know. Is Ball Out? Let me ask you this, man. If you're still there in the chat, is this like a kind of buy very, very cheaply here and looking for like maybe a mean reversion to the 200 or somewhere around here, filling some of these gaps, or is this like a continuation to the downside? Maybe we see some more extreme levels, and I'm missing something here. I'm curious to know your thoughts, but. Just looking at the chart, zooming out here from a holistic view, you can see that you are getting some pretty cheap prices right here. So I'm curious to see what the play is on that. But I'm not a natural gas expert at all by any means, so I'm not even going to get into that. Let's continue looking at the DXY. DXY here, looking at this chart, we can see here that, we broke this very strong level here, this upward bullish trend line here. We had some pretty good follow through on this day. Then we had a solid candle to the downside. We actually traded into that zone intraday right here. So we had the breakout. Let me remove these. We had the breakout, traded back into this retracement. Seller stepped in here and took it lower. So this seems to be like a bearish chart. From my personal perspective, again, NFP this week is definitely going to determine whether this is a buy the dip opportunity or continuation to the downside, if I'm not mistaken. So the XY here looks very, very interesting. Let's look at USD/JPY because this is a very strong intervention this time, right? Last time we got an intervention, it was short-lived. You had a quick kind of pressure to the downside in UJ, but then ultimately was all walked back here and some. So with this time around, I think this is definitely a different time because you have not only Japan intervening, but you have a kind of coordination with the US, potentially Europe, potentially South Korea as well. So a lot of people are on board. This thing has a lot more room to go, in my personal opinion. But just looking at this right here, we go to a 4-hour time frame. Well, first, let's go to the daily. Yesterday, we had an indecision candle. And then if you go to a 4-hour time frame today, you can see here that we are now pulling back, right? We had a push lower, and we are now pulling back into that 200-day moving average, that 200 daily moving average. And right now, it seems like it's holding quite well, and bears are taking it to the downside. So I'm curious to see if there's more continuation. You guys know my stance. I'm looking to buy the dip on this market on any meaningful dips. I'll see what happens if we get to 155, right? If what happens at 155, what does the price action look like? Do we just flush through the zone, or do we hold steady? That would obviously influence my decision there. And then I really like 152 as well, so somewhere around here. And then anywhere below, if this is an actual like bigger term intervention like we had like in 2024, 2022, then anywhere from 142 to 140 is where I would look to start stacking position to the long side. But there's a lot of things at play here that could really influence and determine how much follow through this has, right? So we know that right now you have the outlook is a somewhat weakening US economy scenario, right? You had solid growth yesterday. I'm not going to discount that. In fact, I'm going to keep looking for that as well. Like if you have good, strong growth, that could help, prop up the dollar a little bit. But you have cooling inflation, potential cooling inflation in July as well, the way oil prices are going right now, right? So you have a lot of things kind of pointing in US fundamentals kind of weakening a little bit, which could cause it to have some softness. But let's say you have a really, really strong NFP report, right? If you have really, really strong NFP report, that will definitely go ahead and boost the dollar, because then the Fed can maybe address inflation if they really, really need to, like they say they are, or like if they pivot hawkish, they can justify doing so because the labor market's doing its own thing. It's taking care of itself. And in a weird way, we can have the same kind of candle that we saw in right here, which was Friday of June 5th, where you had a really strong NFP report, but then the stock market sold off, right? Because it was hawkish, and hawkish means, interest rates higher, and that's not good for stocks. So NFP is going to be a really, really big, important data for myself that I'm watching. I'm sure that you guys are as well. So I'm going to see that. But If you have a weakening NFP report, then this, in my opinion, can definitely reach 152, no problem. No problem. If you have a very, very strong NFP report, then of course the view gets a little bit clouded, and then you have to, make a decision of, is this value or is this value, or is price at right now that value? That's kind of my thought process. Hello, Alan, did you read Basen's comments about the intervention? He just said, assured Europeans it was just a relocation of reserves. It is possible they sold euro. Yeah, that's actually possible. So the Fed, the Treasury, has X amount of anything on their balance sheet, and so they can just reallocate, right? They can sell euro by yen. They could sell US dollars by yen or whatever. Like they can offload, and they can move it strategically. So that was the speculation too. Yesterday that they had sold euros. I don't think they did though. I think it was US that they sold, or they bought Japanese yen. But they say from my readings that the impact on euro dollar would be quite minimal, because relative to the outstanding holdings of euros, it's very minimal. So it's not like euro dollar is going to fall off a cliff here. It's all relative terms and how much they have of each thing. But I definitely did read about that. Speaking of euro dollar, yeah, of course, let's go ahead and look at that here. So I'm in the trade to the long side. We actually have a unique opportunity here where we had the breakout that I wanted. We had a pullback. So let me go to the 4-hour chart, and let me actually make this more friendly on the eyes as well. We'll make it like this here. So this is the trade here on euro dollar. I had accidentally bought euro dollar right as USD JPY intervention happened in the background. So we had a pretty quick bump up there in euro dollar, which was good for me. And then we had the pullback here, right? We had the pullback, continued higher. Now we are also pulling back here once again. I really need to see this level hold for me to trail stops and then continue riding this higher. If not, then, if something happens on the macro side of things or the sentiment side of things that pushes this lower, my stop loss is at 1.142. So this is my line in the sand here. Gives me plenty of room for this level to hold its own. If it chops around or whatever, that's okay. I want to let it breathe, let it do its thing, and ultimately I would get stopped out if the structure is broken. So if this level of support here is broken, then price will, take me out here, and that's perfectly fine. What I like about this trade is that we have positive swaps, so I could care less if this thing does this for a long time. I just want to see a drift higher in euro dollar to potentially 1.162. Another thing that I'm going to be mindful of as well is on Friday's NFP, right? So if you do have a NFP report that comes in extremely strong there, I would imagine there's some dollar strength to that could invalidate the trade idea. So I would manually close the trade if price is somewhere over here, instead of just letting it take me out for a full profit or full stop loss. But we'll see. Again, if NFP comes out very weak, that could give this thing a bump up, right? So you never know what's going to happen. But right now I am watching this level of support here, and my stops are way below here. Egg USD, yes, egg USD, it's still trending higher, man. That's gonna be a chart that trends up forever. Let's see. Ball talking about gold. Let's talk about gold. Gold's been pretty boring for me, kind of just hanging out here. This is the chart. I'm not really doing much. Again, I'm looking for 4,200. If we can get out there, I'll probably look to take profit or look to see if we have a breakout to the upside. But right now, gold is just trading in this choppy zone here. 4,200. If you were to get a breakout, retest right here, take it higher, then I'll trail stops and let it ride. If not, I'll just take profits at 4,200 if we even get there. And my stop loss is way below down here at like 3,800, way below structure. So this is a longer term kind of position trade, but I'll be honest with you guys, a little bit annoying just because it's not really doing much. But you're starting to see a strong case for gold. The case is building up, so we'll see. NFP will probably definitely move it for sure, one way or another. So I'll probably know by Friday if this is a winner or a loser. What are you guys' thoughts here? So let me ask you this. We've seen tons of headlines as far as good news, bad news, the war is ending, it's not ending. What do you think about Besant, guys? Is this gonna hold? Do you guys think this is a promising headline that we could look to? Let me know. One in the chat if yes, Besant could be right on this, or two, if this is just another story. I kind of think one. I think one. If I'm being real with you guys, um, I think this could really hold. I mean, we're seeing oil take it lower. We're seeing yields red on the day. Um, I think this could be true. Oil will fade the move by end of day. Don't tell me that, man. Hope so. You want to travel? You caught Kiwi dollar buys. You were holding to the end of the year. Let's look at Kiwi dollar. That was a good one. Kiwi dollar to the upside. What'd you bet at? 564. Oh, bro, you're gravy, man. Yeah, hold that thing. Yeah, you're good. You are good. You bought it somewhere over here. You can trail right here, right now, by the support level on the 200-day moving average, and you can just let this puppy ride. Ideally to 0.6100. Oh yeah, that's a good one. And you're getting positive swaps as well. Let's look at that positive swap. Let's go to Edge Finder. For everyone that doesn't know, this is very, very important if you're trading currencies and if you're looking to hold currency pairs for a good while. Crowd sentiment, where is it at? Carry trade scanner. Okay. So when you're trading currencies, you are basically buying one currency, borrowing another. Okay. You act, oh, you're paying positive swap, man? No. Oh, you're paying positive swap. It's a little bit. Don't worry about it, man. Don't worry about it. I like to trade. I like to trade. What I was gonna get at though, let's do this. Let's do JPY. So with JPY, anything JPY right now, you can see here that there is a base currency rate and a quote currency rate, and the difference, right? The difference is the divergence. When you're trading currencies, you definitely want to be looking at this number, the rate divergence, because depending on your direction, in this case, all these ones here are buy, meaning if you buy this currency and hold it, you will be getting this amount of percentage every single day for holding the currency, right? It's annualized, it's an APR, but it's spread out. Right here, really eat into your profits if you are on the wrong side of the currency, on the wrong side of the wave. So, for example, let's say that you were short dollar yen, right? You were short dollar yen right here at 160, right? Like everyone here was like, let's short dollar yen 160. There's going to be intervention. And nothing happened. It just continued drifting higher. Well, not only did you realize a loss, right, if you were to get stopped out here, but you would also have to, along this whole journey here to the upside, you would have had to pay swaps on top of that. And the vice versa is true. So let's say you bought dollar yen somewhere right here at 155 and you saw a slow drift higher and you got some appreciation and you took your profits somewhere over here. Well, you would have had appreciation, like your profit from the trade, but then you also would have had on top of that, a cherry on top would have been, you would have been paid for every single day you were holding this currency. So that is the beauty and the burden of positive swaps, is they have to be very careful there. Now, if you're holding the trade for about a day or 2, 3 days, this really wouldn't be too impactful. But if you're holding a trade for weeks or months on end, this could really make a big difference. Also, too, let's say you just place the trade right here and it does nothing for 6 months and you close it 6 months later at the same price level. Well, you would have had zero appreciation in the currency, but then you would have had, along that 6 months, you would have had positive swaps being paid out. So you still would have been net positive. So that's the cool thing about currencies. I love that. I always talk about that. So my apologies, guys. I know you guys have heard me say this spiel so many times, but for the people that are new out there, that is what I love about currencies. KDX says, yep, the environment switched completely. Now swing is very stressful with weekend holding, while day trading definitely seems to be like a safer option. I've been like swing trading, right? Like, for example, gold. I'll hold this thing over the weekend, no problem. But the thing with this one here is that the size of the trade is very low, and my stop loss is so wide to where, like, if you have noise or you have gaps or whatever, it's not like I'm going to be taken out or experience massive slippage or anything like that. Like, I'm giving myself room to breathe, room for error, and room for volatility. So I say that is the key, especially in a volatile environment like times of war or times of tariffs or times of interventions, right? Like for example, with the yen here, like guys, you are having daily moves, daily ranges of 360 pips on dollar yen. Like this is not a chart. This is not a trade where you're like, you know, I'm gonna short this thing like this, and my stop loss is gonna be 10 pips. Like, listen, unless you're like bottom taking or top taking the market, you're not gonna be able to do that, right? So you have to really, really expand your stop loss, lower your risk size, and then people are gonna say like, well, that means I'm just gonna make less. Well, yeah, just make less. Like that's not a problem. Making something is better than making nothing, right? Like just make less. And you know what? Maybe you're making less, but the moves are so big that it just compensates for the lower size. Like usually you would, you know, these daily candles here, right? If you're using that approach of like 10 pip stop loss and you're trying to catch a daily move, right? Like your daily candles here were like 46 pips. Okay? But if you just reduce your size, but your daily candles that you could potentially capture is 300, 400 pips, then there you go. Like it just compensates for it. Like there's no need to try to go all in on something like dollar yen, especially when you have interventions too. There is no structure. There is no technical structure that you can go off of. It's not like a trending chart. This thing will move knee jerk you one way and then go the opposite way in a matter of minutes. So I would say just be careful. Like for example, this right here, this would have been super. Like I'm looking at this from a 4-hour chart because I know I've experienced this. Like I've been on this bad side of the market where like you saw this big red candle, you saw this big wick here, then you probably saw this candle here, and you saw this green candle here. You're like, oh, we're back above 160. Like, okay, we're gonna retrace the whole move like we did in the past, right? And then you have this big red candle just annihilating everything here. And then you had a green candle right here. You're like, oh, maybe it's back, right? Like, thank God I didn't, you know, thank goodness I didn't, you know, get taken out there. And then boom, again. Like there's no structure, right? It's so tricky. You need to just reduce your size and widen that stop loss by a couple hundred pips if you want to trade this. That's just my honest thoughts on that. And if you don't do that, then you're gonna have a tough time. And then you're gonna blame Besant, you're gonna blame Bank of Japan, you're gonna blame everyone under the sun besides yourself because you weren't responsible. I agree. I caught Swiss yen, made good money, but still I am in swing trader, but I closed that one as soon as the intervention was over. I don't want to swing a 4%. You just announced a move. Yeah, like, and also too, you bring up a good point, KDX. Like, don't be greedy. Like, if you somehow caught catching 400 pips, 500 pips in a matter of 2 days, dude, take it. Just take it. You know what I mean? Ball out's trolling right now. Trade. No, not even, man. That's a little bit too low. But you know, trade, you know, make the size relative to your account size pretty small. You know what I mean? That's all I'm trying to say. Make the stop loss, make the size to where it won't affect you, just like any other trade. Okay. Yeah, Bala, you got to move that decimal points a couple slides to the right. Me personally, I went 10 lots on UJ. Not even joking. 10 lots. No, I'm just joking, guys. Just place a small trade, and if it moves in your favor, scale up and add more. I love that. So maybe not on an intervention, just because it's very volatile still within itself. But I always say that you can always add to a position if it's going in your favor, but it's so much harder to take off the position. Like it's so easy. Like if you have a trending chart, like euro dollar, for example, right? Like let's say, I don't know, let's say that this trade here that I'm in, this level holds quite nicely and it starts trending higher. I can just responsibly start to add my position size a little bit. And yes, my cost basis moves up a little bit, but you're responsibly just adding to the position and adding to the winner, right? But if you are going deep into a position initially and it starts going against you, for some reason, psychologically, you want to like either take off the stop loss entirely or move it more into the negative. Like psychologically is just so much harder for you to manage your trade responsibly when it's going against you. So you can always add to the position, but it's so much harder to take it off when things are going wrong. The smaller your lot size, the easier it is to be profitable. This is literally a huge secret in trading. Slower gains being unprofitable, or slower gains beats being unprofitable due to variance. That is the only variable that you can control. Like, you can't control whether Bank of Japan is intervening. You don't know that, right? Like, let's be real. We don't know when Bank of Japan intervenes. We also don't know when Scott Bessent's going to say something. You also don't know what the next NFP report is going to be. You also don't know what Trump's going to say next. You also don't know if a missile is going to hit the Strait of Hormuz in the next 30 seconds. Like, we don't know that. The only thing you can control is your risk size. That is the only thing you can control. So if you can risk properly, and if all things comes to worse and things hit the fan and you can still survive, you are in a good position. And also too, like, understand like your stop loss, like where it is at, and accept that loss. Like, just assume it's going to hit your stop loss every single time. Like, a losing streak is inevitable, and it's actually very, very normal. And if you're actually not having a losing streak, then likely you are having a string of luck, and you don't want that confidence to kick in, because at that point you start upping your risk size and whatever, and it just takes the one loss to really wipe out all of your progress. That has happened to me before, where I am on a string of winners. I think I found a gold nugget. I'm like, okay, and I'm progressively upping my risk, and then it just takes one loser to just wipe out all of your progress and maybe end some. And then you're like, dang, all this work, all this time just wasted because I thought I was God. So yeah, risk size, accepting your stop loss, that is like the biggest thing ever. Um, Everyone who says that they are making 10% a day or whatever consistently over months, years time, I question that. I really question that. Chase bigger capital, not a bigger size. No, I was just joking. I was not taking 10 lots on UJ, but yeah, 10 lots on UJ right now. I'd take a month off. Nah, I wouldn't take time off, man. I love this stuff. This is fun to me. This is fun. But I'd definitely have a good dinner if I was 10 lots on UJ. Yep, losing streaks are inevitable and they're guaranteed. It is just probabilities. That's all. You should expect and embrace losing streaks. Yeah, it's just a cost of running business, right? It's just a cost of running business. In some businesses you have an employee, right, leaving, and so you have, you're down on one person, and you're not as productive, and that's the cost of doing business, right? If that is the case in trading, you don't have employees, you don't have brick and mortar spot, whatever, you don't have rent, insurance. You have the cost of doing business would be losing streaks. That's one of them. Positive swaps or negative swaps could be another cost of doing business. There's different costs of doing businesses for different industries. In trading, cost of doing business, losing streaks, completely normal. Max caught a monster, and he risked 0.1% on UJ. Also too, what's kind of, you get this negative feedback loop when you oversize, but then it actually goes in your favor. I would argue that's actually probably worse, because then you confirm in your mind what you did was correct, and then the next time you probably go bigger, and so the cost, the hurt is probably even worse, double, right? Than have you been wrong the first time. So like, the more you kind of instill and justify bad habits, the more you defer the pain. But when that pain does come, it is tenfold. So yeah, IRS will also have a good dinner. Don't get me started on that, man. Don't get me started on that IRS stuff. Yeah. That's why you got to have mark-to-market election, man, and try to wash out every single loss you possibly can. But yeah, the IRS will definitely eat its portion of the pie. Silver breaking as we speak might lead the rally. Yeah, let's look at silver real quick. What's going on with the metal? So we've had these headlines. We had Besant here addressing Trader Hormuz. We also had him addressing the intervention. Let's see how the market has digested that here. So DXY pretty flat there. Yields, the 2 is lower, the 10 is lower, 30 not really moving much. Gold is flat, sucks for me. Silver, though, on the other hand, to Max's point, up 2.34%. So silver, from a technical perspective, this is kind of the chart that I'm looking at here. Yours could be different, but I kind of have this wedge, this descending wedge that I'm looking at. And it can go either way, right? So we've been holding this level here quite nicely, and we've also been holding this level of resistance here as well. If we do overcome this level here, then I'm curious to see what happens at the 200 at $70 to see if we have a breakout to the upside. We'll see. You know, I'm not the biggest silver expert, and you know what? I kind of neglect the chart too, especially because of the price action that we saw last year going into this year. You know, you had the 80s, then you had 2010, 2011, and then you have something similar playing out here with silver. So the forward-looking returns, just looking at the past when you had these monster run-ups, just doesn't look too attractive and something that I want to participate in. So I do neglect silver, I'll be honest with you guys, but we'll see. You know, and that doesn't mean that in the medium or in the short term you can have trade opportunities. I just neglect it. So I would say if you do break this level here from a technical perspective, and you find your way above this, then the next obstacle would be that 200-day moving average, and maybe you can catch a move, you know, in between then. So, but I personally don't look at silver. I'm more focused on gold here. I'm in the gold trade. It's pretty flat. It's kind of doing nothing. I'm looking for 4,200 to see if we even get there in the first place. And if we get there in the first place, either I take my profit there or I allow it to do a break and retest and continue higher. That's a question within itself. We have lots of key data points coming up this week, so NFP will definitely go ahead and drive that move in either direction. So I have an understanding or have a feeling that I'll have some more clarity come Friday. But with that, guys, that is the end of my session here. I'm going to go ahead and pass the baton off to Nick, and I'll be back here in about 30 minutes or so. So stick around, stay tuned. And yeah, be back soon.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Thank you for being here, hanging out with us. And Alan was great. I was listening to his segment as always. He is a breath of fresh air in the trading space. You know, we've got just such a quality lineup here on the show, and I say it often, but grateful to have met such great guys to work with. We are still in the marketplace for a female lead on the show. We have yet to find any candidates that have reached out to us. So if you are interested in being a live stream host here on the A1 Trading Show and you are female, you know, we're open to all sorts of people. We've got lots of different guests, but we are missing that in our repertoire. So reach out to us, support at a1trading.com. Anyways, S&P 500 up and over here. Looks like the case to be made here for breakouts. We've been range bound for a while. And I think if you're looking at this, you've got to kind of look at this with your squinted eyes. There's a couple things here. Let's do a little anatomy of the stock market right now. If you're looking at the S&P 500, this looks very promising because we're pressing through the all-time highs. We look fantastic here. It actually also looks good if you look at the Dow, for example, but it's the Nasdaq that maybe draws a little bit of skepticism in. You can kind of see we've topped out here a little bit, pushed lower beyond or below this range here at the highs, and we're now kind of retesting that area. I think that if you're watching the stock market, if you're someone who is cautious on it and or bearish, this is the spot, right? If you're a bear, you're hoping that this level kind of tops out today, you get rejection, and something like this forms. But to be honest, it's looking less and less likely. I kind of remain neutral to maybe slightly more bullish on indices. Look at the Dow, by the way. My goodness, man. Dow to fresh all-time highs. S&P 500 is pressing in on all-time highs as well. You can kind of see NASDAQ taking a little bit more of its time, given that the tech side of things has been a little bit more under scrutiny recently. You've had the semiconductor world, which we've talked a lot about on the stream. It is up today very nicely, looking like the ceasefire might be holding. I don't want to jinx it because we've seen this story play out so many different times. But right now, markets are optimistic. You have oil sharply lower today again. So this is kind of confirming the sell-off, right? We had a big gap down, moved lower, moved higher, big gap down. The question is, we saw a little bit of a bounce today and yesterday, but now we look like we are potentially pressing through these lows. And if you're someone who's watching precious metals, if you're watching stocks, you're cheering for, if you're a bull on those things, you're cheering for oil to probably keep moving lower in the meantime. Inflation woes are kind of center to the story here right now. Gold and silver look great today. Gold is up. Silver looks fantastic, up 2.8 something percent. I know somebody was bringing that up in the chat. Look at that here on the 4-hour chart. You're pressing up to some major resistance here. Would be very nice for the metals if you could get back above those areas. 60 is a huge round number for spot silver. Gold here, still in a range. So I think my thought process on it is skeptical at first glance because we have seen this story so many times where you've got ceasefire, ceasefire, ceasefire. We all hold our breath waiting for confirmation from the other side of things, and we don't get it, and the bombs start dropping again. That has been a head spinner for the last several months. It's been really difficult. If you've made predictions based on geopolitics, most likely you have been wrong. Let me tell you why. Unless your idea was we're not going to go anywhere on a lot of markets, it's been really difficult to call. So you might say, well, I think the conflict is going to continue. Okay, well, you've kind of been right. On a factual basis, is the conflict still unresolved? Yes. But has the chart looked like that? Well, if you're looking at S&P 500, certainly not. Things gone straight up anyways. If you're looking at gold in the last few months, if you said conflict's going to continue, oil prices higher, gold lower, right? Well, not really. We've stayed in a range for the last month and a half. So unless your strategy was buy low, sell high, which, some people have done really well with, that's been tricky. And same thing with oil. If you're saying conflict's going to continue, okay, well, we've only made it up to the 90s. We never made it back to 100. We never saw, the grand rip higher in oil prices. I'm not saying we can't see it start tomorrow. I'm just pointing out that this has been a tricky market to trade because if you've tried to make predictions based off of geopolitics alone, guess what? Most likely you've been disappointed. Very, very tricky. So what's the answer? Well, again, if you're a range trader, you just love it. You say, keep doing what you're doing. Everybody, let's just keep doing the range side of things. But if you're somebody who is more directional, I think we want to wait for price to confirm and macro to kind of line up. And if I'm looking at the S&P 500, like if I'm looking at stocks, I am going to lean a little bit more on the bullish side. However, fundamentals this week, I'd be interested to see what happens with the non-farm payroll that's coming out on Friday. That could be potentially a tailwind to S&P 500. If you had, I personally think that if you have reasonably healthy jobs numbers, generally speaking, I always see that as more of a positive, though it's not equally distributed. If you get a strong jobs report, I would argue that's more favorable towards Mag 7 than it is for small caps. Small caps want to see rate cuts. Big companies like Amazon and Meta and Google, which are the things that I am long the most, they don't necessarily care if the Fed cuts rates. Well, actually, you know what? I take that back, because that mantra, a little bit different nowadays. With all the CapEx spending, I think that the Mag 7 is a little bit more sensitive. I maybe need to revise my thinking a little bit on that. A couple of years ago, let me rephrase that. A couple of years ago, Mag 7 could not care less what the Fed was doing, right? Because they had so much free cash flow. Now, arguably, it's a little different. I still think that they meant cash. They have the ability to dial back their spending if they needed to. I still like the Mag 7. It is where I am most concentrated. I'm long Amazon right now. It is doing fantastic. Amazon is a beast right now. Although pulling back today. Meta, how's my Meta doing today? Not so hot. Meta, I'm flat on this position. I'm also long, not in this account, but in my other account. Google is a huge position for me, which has been doing really well. I've got IGV longs in my other position, in my other account. That's doing pretty well also. So, those are kind of the areas that I like. Microsoft is, I traded Microsoft. I did really well in the Microsoft trade. Shorted some puts on this one. That one worked out really well. So I made a post yesterday in the Discord and across my socials just about how, I trade a lot of different things, and I do so intentionally because there are times where you can trade different things and they are just terrible to trade or amazing to trade. Simple explanation. If you're looking at gold the last 2 or 3 months, if you're somebody who says, I only trade gold, I'm a gold obsessed junkie, then don't worry, me too. But there are times to step away from, I equate it to, this is maybe a bad equation, but really great blackjack players who count cards and are really good at their stuff. Blackjack, if you are unfamiliar, mathematically is a beatable game if you're counting cards. Casinos don't want you to play if they find out that you're doing it, but it's perfectly legal. They will just back you off. Anyways, I'm not a good card counter, but I understand the concept is very comparable to trading. Same with like good poker players. There is a mathematical way to make money consistently long-term playing poker, playing blackjack, trading. So a good blackjack player or a good poker player will only sit down at a table that offers them some kind of edge or advantage with perfect play on their part. Now, I'm not encouraging anyone to try any of these things. In fact, you probably shouldn't even trade. Statistically speaking, all of these things are incredibly unlikely to yield any money for you. But when we are thinking about these technically beatable games with a lot of practice, a lot of skill, a lot of dedication, as traders, it's the same thing. Traders have a choice of which table they sit down to play the game. It's called expected value. Yes, EV, right? So good blackjack players, poker players, traders, they only sit down at tables where they believe there is a solid edge, or there's something, even if it's a slight edge, something of tangible expected value, right? So for me, what that means in trading is there are times not to touch gold. There are times where gold just, there's nothing there for me. And I've not really been trading gold a whole lot. Now, a couple months ago, I had a very bearish outlook on gold. Inflation was stubbornly rising. The conflict was still kind of earlier on. And there was a beautiful opportunity to be short gold and silver for a bunch of this year. But that trend has really seriously slowed. We went from this type of environment, just a beautiful waterfall trend to the downside, to what are those, right? Back and forth, back and forth. A lot of indecision here. So my point is, there are times to look at gold and there are times to look at other things. Stocks are starting to look attractive. They look like they might have a breakout here. I love a good breakout. And a lot of people might be afraid of all-time highs. Not for me, or not me. I'm not afraid of all-time highs. All-time highs, the expression goes, all-time highs beget more all-time highs. A lot of times, this is what happens. You get a new all-time high, people flood into the market, they're excited, they chase it, and it goes for a while. Could that be happening this year? Maybe. Do I like the S&P long? I'm watching it. It's on watch for me. Waterfall to what are those? I almost spilled my coffee, Nick. Sorry about that. Cheers. Cheers to your coffee. Sorry about that. We can easily go to 8,000. I mean, I would agree. Like, stocks are designed long-term to go higher. And if it's stock season, you know, boom, we could easily go higher. Now, I've been trading some individual stocks. I've been focused more on individual sectors and stocks and watching the indices than I have been on gold. You guys know I can't stay away from gold for long. And if we get the right setup, I'll be back over there staring down gold again. But there are times where you've got to step away from that table. Dollar index also looks pretty soft here, right? You've actually lost a little bit of, you've lost all that momentum. Things were going swimmingly for the bulls for a while. I actually flipped more bearish, or not bearish, but much more neutral on dollar right around here. Started to go back up, and I was saying, well, if we break higher, we'll get bullish. And you know, I get a little flack on social media. Listen, put yourself in my shoes. Every day I get up on the camera and I talk about the trades that I'm in, the thousands of dollars that I'm gaining or losing every day, and everyone has something to say. I totally get it. I've signed up for this. It is my role. I embrace it. But understand, none of us know with certainty what's going to happen next. We're doing our best. I heard Alan talking about it. You can't control what the chart does. You can't control what happens. And if it seems like I'm flip-flopping, that's sometimes my the critics will say, Nick, you're flip-flopping view to view. I genuinely I don't know that they're watching my videos closely. Like, people have been saying, Nick, you're flipping on gold every day. But if you've watched, and I know a lot of you guys, I know most people are like, no, that's not what's happening. I've only traded gold in the last 2 months, like 2 times. Both were small losses. But just because my bias on something, and this is really important, I think that every trader should think about this, okay? What's your bias on something? All right, that's one question. Are you going to take a trade on it? That's a different question. So I have a very slight, modest bullish bias on gold, but there's no trade for me here. There's a difference between having a bias one direction. Like, I only am open to, like, it's kind of like saying my dating type is this. Does that mean that you're necessarily dating someone? No, right? Like, I'm open to dating this type of person, but that type of person hasn't come along yet, right? Same concept in this idea of like, okay, my bias on gold, I want to date gold to the upside, but I haven't been asked out on a date yet by gold. That's the way, that's my analogy of the day. But like, it's one thing to think, okay, I generally prefer the long side on gold, but the chart is just not ready. Like, I'm just, for my style of trading, and it might be different for you, might be different for the next guy or girl, but for me, gold is not quite ready for a trade, but I am still generally bullish. You see what I'm saying? That is it. And also, I think people think it's like an insult to say you're flip-flopping. I think in a world where so many content creators are perma something, being a flip-flop trader, like I might literally, if I ever just like go missing off the TraderNick YouTube channel, someday you're going to see my face on a new channel called Flip-Flop Trader. Because you know what? Flip-flop is it's a great thing if you have a strategy and you're willing to flip bias on a whim because new information contradicts the old information. That's not a weakness. That's a strength. Acknowledging when it's time to flip your view on something and adjust is critical. It is like actually so important in trading. That said, I have not flipped at all on gold in the last like month and a half. I've been bullish pretty much only, just no trades. If we're looking at the oil market, this one I don't have a bias on. I maybe lean just modestly bearish on this one, but it's really not very much of a bias there. Flip-flop means reaction trading. That's the way it's supposed to be. Absolutely ball out. Like that's the thing is if you can't be open-minded to new information, like what I'm saying is I think we have so many, you guys know all the creators out there like that have a permanent view on something. Like Peter Schiff, for example, is a perma gold bull. Long-term I am too, so I'm not hating. For example, you have Tom Lee, the notorious perma bull, right? He's always bullish on stocks. The point is, I think that's actually more of a dangerous thought process. Like if you are, irregardless of new information hitting you, permanently bullish on oil or permanently bearish on gold or permanently bullish on tech stocks, that to me doesn't feel like the right way to approach markets. Markets and information changes. And if your bias can't adapt to it, then you could get stuck with an old bias applied to a new set of information. So honestly, when I built Edgefinder, or have been building Edgefinder the last 6 years or whatever, the whole point is to have something that is mechanical, not subject to bias. Because if I told you my bias would be, oh, I always want to be long gold and I always want to be long tech stocks on dips. And generally speaking, that is something I like to do. But having a checks and balance system, this is like I'm the president and this is like my council, right? This thing, veto or not vetoes, they try and pass laws and I veto or accept them, right? That's like what Edgefinder does for me. And I think whatever trader or whatever, you trade, whatever your system strategy is, having some kind of mechanical approach. Like, okay, let's say I'm bullish on gold, but I have a weak reading here, not enough strength on the Edgefinder to get me into a trade, right? Edgefinder is my council. It's the parliament. It's the Senate to my, executive decisions. That is, I've never really used that analogy before, but that's kind of perfect for what Edgefinder is. Edgefinder is not a magic crystal ball. It's the Senate to the Emperor of Rome. It helps to guide. It offers suggestions and ideas and insights and things. But ultimately, I'm still the decision maker. I'm the one who puts on the risk. I'm the one who, maps out the trade, vetoes an idea. So right now, if I'm looking at Edgefinder, I do still have this Nikkei short. I have to say, I think this one's not working out very well, and I may get stopped out of this idea. Yeah, so we came back. I'm sticking with the trade for now. I still really like the idea of keeping a little bit of short exposure in the account. I have plenty of long exposure. When I'm talking about long exposure, I'm talking about long exposure to stocks in general. I have a lot of risk on in the portfolio right now. Yes, Emperor of Nasdaqistan. So I'm going to keep this trade on. I mean, there's nothing that's changed in my scoring. I still like the setup. I would like to see this thing roll over sooner rather than later. If it doesn't, gone. See ya. Peace. Out of here. What are those? That's what I'm looking for on Nikkei. We did add natural gas. Shout out Ball Out. He likes natural gas. We also added Ethereum. So we got some crypto stuff in here added, which I'm excited about. Ethereum does actually have COT contracts as well. So you can see what institutions are doing with Ethereum and Bitcoin. Kind of intriguing. So yeah. Also, can we just do a real quick check on something? I want to see latest put call ratio data. Played around with this, made it visually a little bit more appealing, I think. Put call still elevated for S&P 500. This to me just tells me, okay, as of yesterday, crowd sentiment still a little bit pessimistic. Man, does that not wind up the spring? So you have crowd sentiment still kind of pessimistic on stocks at all-time highs. That to me signals there is a even stronger possibility of a breakout. When you have everybody bearish at highs, that is recipe for short squeezes. So I would not be surprised to see stocks head higher from here. Nikkei, however, a little bit different story. This is interesting. Like, I think that maybe if I was to take a pairs trade, I'm not, but let's just say I was, it would be short NAS, long SPX. Call volume is relatively elevated for the NAS. Kind of interesting. So you actually see on Nasdaq, crowd sentiment is betting the rally, and on S&P 500, it's betting the sell-off. Very, very interesting. There's something about like options data to me is a very powerful tool because it's hard to see that stuff just in a price action chart. But using simple, just really simple tools like this can game change your understanding of what's going on in sentiment land. The Russell, people are chasing the Russell. I'm sorry, they are betting against the Russell right now. So if you're somebody watching IWM or RTY, people are actually betting against this one. That tells me the Russell may actually be primed even more for a breakout. I do like small caps. I had a wonderful trade early in the year on small caps. I wouldn't mind being long small caps again. What side is this? Oh, man. Oh, don't give it to me. Do not give me the opportunity to do a sales pitch on you. Edgefinder is the tool that I'm using. It is, if I say so myself, a dandy tool for people who are interested in crowd sentiment, macro fundamentals, and stringing it all together. If you do not have a copy, you should have a copy. And if you don't, I'll be insulted because I spend hours a day trying to make this thing better for everybody. So if you don't have a copy, then you know what? To be honest, I love you anyways, and I hope you buy a copy someday. Customers of Edgefinder should know that you are just behind my wife in some of my first thoughts of the day. How can I make Edgefinder better for our customers? I think about that all the time. That's like a shower thought for me. I'm sitting in the shower. What can I do to make the Edgefinder better? Like what can I do to make that thing better for traders using it? So anyways, there's your sales pitch. Get the Edgefinder if you're interested in it. Head over to our website, A1Trading.com. You can explore it. This is another thing we're spending a lot of time in right now is overhauling our tutorial section. Head over to A1Trading.com. Check this out. Look at all of these features, man. I'm telling you. We are on that grind. The amount of coffee that we burn through is impressive. Edgefinder should just have a little asterisk next to it that says fueled by coffee. Actually, specifically fueled by the coffee fund. We talk about it whenever there's like a donation to the stream. Somebody will drop $1 or whatever. Every time that goes straight to the coffee fund, which is the fuel. It's nightmare fuel for Edgefinder building. Anyways, let me keep going because I was looking at some crowd sentiment stuff. That was very interesting. The divergence in sentiment here, pretty fascinating. Let's look at gold and silver. Why not? Silver here, if it'll load. Okay, there we go. High call volume. This makes me a little cautious. I would like to see silver break out. I love the potential here. But here's what it probably looks like in my view if I was to get long silver. Let me map out some levels. Okay, so silver right here, you've got pretty significant resistance at current levels. You've also seen a huge surge in call volume on silver in the days prior to this. So that tells me, okay, crowd sentiment is a little optimistic on it. Soon we'll have a coffee sponsor too. Maybe we should just start our own coffee brand. Anybody want to start a coffee brand for, we can call it Edge Finder Coffee. Or we could just call it Edge Finder 2. I shouldn't say this, but you guys know there's a knockoff company using Edge Finder's name. Frustrating. But we're on it. Don't you even worry about it. Don't you even worry about it. You cannot be coming for A1 Trading's child like that. Edge Finder is the child of Edge Finder or of A1 Trading. Anyways, flip-flop beans. Nice. Yes, that's good. That could be the coffee brand. Coffee brand for you for A1 Trading, flip-flop beans. Edge grinder. Yes. Bala, options are being explored. Let's just say that. Yeah, love that. Yeah, we should seriously start a coffee brand. That would be awesome. Anyways, let me finalize this thought, and then we're going to throw the show back over to my friend Alan. He's taken over again. Last thought on silver and gold. So big surge in call volume. How this would look like for me if I was to get bullish on silver. I'd like to see this thing break higher, and I would love to see from there the call buyers get a little disappointed, turn into put buyers. I love that signal for breakouts higher. One of my favorite technical signals in the world, so simple. One of my favorite readings in the whole world is the put call ratio. Wait for it to be a contrarian signal. Okay? So simple, but I love when you get like everybody rushing the put side. I love to be a buyer. When everyone rushes the call side, I like to be a seller. Right now, if I'm looking at gold, now this is not the only thing. I never use anything in isolation. I think analysis is a comprehensive study. You are looking at lots of things at once. You can't just draw a conclusion based off of one indicator. In my personal humble opinion, I've built 1,000 bajillion indicators in my life. What I've found is that it is the synergy of a lot of things, not the isolated understanding of one indicator, that builds confidence in a trade. So when I look at gold, I'm not going to go short gold just because everyone's buying calls. But if I had other factors, if I had macro factors, if I had COT data, if I had seasonality, if like many things are pointing to a short bias, that's where the setup goes. And you might say, well, what are many things? Like you're being ambiguous with your categorization of what would be a bearish setup. Purely mechanical, no guesswork. Edge Finder is a synergy system. It is a confluence system. That's the word I'm looking for. And it maps out a hard score for stuff like that. Years ago, I was probably like a lot of people who are watching this. I was newer to trading, and I would see people talk about their strategies and stuff like that, but they would be very ambiguous with what they were doing. They wouldn't tell me like how they are actually entering and exiting the market. On my channel, I find that to be frustrating, so I don't do that. On my channel, I talk exactly about what I'm going to do, when I'm going to do it, why I'm going to do it. My strategy is not a secret. It's not a black box because there is a level of discretion that comes into it, but it is 85% mechanical. Macro fundamentals, lining up with technicals, lining up with sentiment. The score will show up here. And if it's strong and I have a nice technical setup to go with it, I usually execute a trade. I found that to be really frustrating when I was trying to learn, is I would watch people who I couldn't grasp. If you watch me long enough, and I have people who do this, and I think it's awesome and also scary. I have people who know the trades that I'm going to place before I place them, which is freaky. People send me a message on Discord and be like, Nick, you going to take that trade? And I'm like, shut up. Yeah, I was going to take that trade. Like, screw you. I had that idea first. But you know what I'm saying? Like that is, but that's the point, is my approach is fairly repeatable. It is purely, or it's fairly mechanical. There is no magic to it. It is rooted in macro and trend following. Nothing is holy grail. Nothing is perfect, but it's worked for me over the longer term. So yeah, it's a bunch of single puzzle pieces we got to put together. Guys, we got Alan Perez coming back on. Let me not go too far into his time. If you guys want to try out the Edge Finder, we'll drop a link here in the chat to where you can sign up for a trial. If that is something that you're interested in exploring, seeing if the tool is right for you, take a second, fill out that trial information, and we'll go from there. With that said, Alan Perez is back on the show just after this quick break. Don't go anywhere. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening. Good to be back here. What a fun session today. I've been listening to the whole thing. So fun, so fun. It's Tuesday. Markets are developing. We're seeing a lot of stuff happening. It's been fun. It's been fun. I also had to re-up on my coffee as well, so I am now riled up, ready to go. I'm in a good mood. I get in a better mood when I have that first sip. I'm sure you guys can relate to that as well. It's such a great feeling. Flip-flop beans. I got flip-flop beans here in the cup right here, straight dark, how I like it. Do you guys like it dark? Do you guys like it sweet? I'm curious to know. I've definitely matured, right? So I think I am now like progressing. There's like a spectrum, right? You go from like your vanilla bean at Starbucks, where it's like straight up sugar, like dessert. Then you get more and more down the line, and now I'm at the stage where I kind of need it to be dark, because if not, like I it just doesn't feel like it's giving me the boost that I need. So I don't know. That's just me. There's really no right answer, but yeah. You only drink Panama, whatever that means. Panama Geisha? Don't know. Dark, no sugar. Every once in a while, like if I'm visiting my grandma, she has like hers where she'll like make it dark, pour like a little bit of concentrated milk, a little bit of sugar. You eat that with like some sweet bread. We call it pan dulce, like sugar bread. I'll do it like that if I'm visiting them, but for the most part, I've definitely moved towards the dark side. Ha ha ha. Dark for functionality, but all the fluff if it's a treat. Fire. Actually, there's a coffee shop that I just discovered. It's called Summer Moon. It's a chain. I wonder if it's around the US, but Summer Moon, they have like this double, I think it's called a double moon shaker or whatever. So it's like 2 shots of espresso and like their moon milk. It's like this much though. It's this much liquid. It's like kind of sweet, but it's very strong and bitter. It's a good medium, I'd say. Holy moly. Nick's at the protein milk instead of creamer phase. There you go. That's a good way to get 2 birds with 1 stone. I'm not at that level yet, but I'm sure it's delicious. It's like steak. You start well done and then you end up medium rare and you are like, what was I doing? You know what though, ball out? I'm a medium well type of guy. I'll be honest with you. Now I'll be honest, I haven't really tried medium rare. I don't think. Maybe I have, maybe I haven't, but I'm a medium well type of guy. Prisoner said, just chew the beans. There you go. That's how you do it, guys. If you guys, he is like 8 notches above where we're supposed to be. Just chew the beans. Um, that blue color is sharp. Try to change it to gray or black. I actually like the blue color. You know, it goes with the Telegram, the Telegram theme, which speaking of Telegram, here it is. Join it if you're not in there already. Completely free. You have markups, analysis, you have polls, you have promos, you have bonus content, everything you could ever want in the Telegram channel. So go ahead and do that completely free if you're not already there. Well done, to be honest. I like it. I like it with lots of ketchup too. Just joking. No, that's flagrant right there. No ketchup. Any stake above medium is criminal, guys. We are deviating too far from what we've been doing here. I've been here the whole time, man. I'm here twice a day now for like, this is our third week now, I think. Second week, maybe, I forget. But we are deviating, guys. This is a trading live stream. Okay, we are going down like mukbang lane, and this is not what it's supposed to be. Maybe we can create a separate channel for that, for like the jokes and stuff. But this is not good, and I haven't had breakfast as well, so this is horrible. Okay, DXY. Let's look at it real quick. I'm pretty flat today. Nothing much going on. You had some comments here from Descent earlier about addressing the Trader Hormuz stuff. It's supposed to be open today or tomorrow. We're gonna have a deal, and then he also added some more fuel to the fire when it comes to the Bank of Japan stuff. So, but nonetheless, though, pretty calm market, I would say, on the currency side of things. Now, when it comes to equities, it seems like we are having a risk on day for sure. Nasdaq, I'm watching. So I was listening to Nick, and there's some clear divergence there between the Nasdaq and the S&P 500. So I'm gonna be watching that to see what goes on there. But S&P is already at all-time highs, whereas Nasdaq here is struggling there a little bit. So we'll see. This level of resistance will be quite important. We've held it some time before, so that's what I'm looking for Nasdaq. But again, I'm not looking to trade Nasdaq by any means, but something I'm watching. Yields are softer a little bit today. The 2 years having another attempt to break lower, which is interesting. So I'm looking at the US 2-year yield. This is when the war started, right over here. Right over here. And for that whole time, this upward trend line held up quite nicely. You had a little hint of a potential breakout here in July, but it failed. Now you're having another hint of that as well. So if you just extend this trend line here, you can see that we are trying to break out again. Maybe we go to the downside, maybe we don't, but we'll see. Let me go ahead and look at CME Fed Watch. I pulled it up, but I didn't actually look at it. Let's see here. So let's go to probabilities. What's the market thinking? Market's thinking 1 rate hike in September. We're going to hold through until March of 2027, which is the exact same that we've seen in the past. So we'll see. I will say NFP coming up, very, very important. Okay. So if you have a strong NFP report, in a weird way, that could be hawkish for the market. That could send stocks lower, and that could send stocks higher. If you have a really weak NFP, that could send the dollar lower and stocks higher, because a weaker NFP could probably prompt the Fed to go ahead and switch their focus from inflation, especially if it's taking care of itself, to the labor market. And in order to help the labor market, they would be cutting rates. So that's what I'm looking for. NFP is really, really big this week. I'm watching it. I'm sure a lot of other participants are watching it. But that's that. Now, from the Edge Finder side of things, let's go to the top setups page. And I noticed that while I was watching the stream here, we had some, it seems like newer viewers that didn't really know what was going on with, they had questions on what this was. So I'm going to go on a quick spiel here, maybe 30 seconds to a minute. This is a dashboard. There's an algorithm behind it, and it gathers all of the macro fundamental data, sentiment data, technical data, and it gives it a score. So imagine that you are in the background, no matter what time it is, you are constantly looking at UK's labor, inflation, economic data, growth data. You are constantly watching Canada's, New Zealand's, US, Europe. You are constantly watching all of the data points in the background, no matter what time of day it is. And as soon as the data drops, it gets inputted into an algorithm, and that algorithm tells you if this thing is net bullish or net bearish. It is that simple. So it's a way for you to streamline your sentiment, technicals, and fundamental readings, and gives you a score. So it's been great. A lot of us here on the live stream use it. Tiger, myself, Marco, Nick, we all use it here. So it's super efficient at giving you the best reads. And sometimes like you see here, like in the middle, you see things that are neutral. All right. And those are trades that you probably don't want to take because there's not really a strong kind of viewpoint, a strong force behind that trade versus, like, for example, Aussie Kiwi, Euro Kiwi, something that I'm watching really, really strongly here. I talked about it here with Marco yesterday, but Aussie Kiwi is something that I'm looking on the downside. So let me give you a quick real life scenario on how you could use the edge finder to take the trade, right? So the edge finder is automatically looking at the growth, inflation, labor, technical sentiment, everything for Aussie Kiwi. You see it's a bearish reading of -8. So that means you want to obviously short that market. Then you go to the actual chart and you find a technical entry point for Aussie Kiwi. It depends on your style. Marco, I see you in the background here. Let me finish this thought real quick.
Yeah, no worries. Finish up.
So with Aussie Kiwi, right? Some of you guys may be aggressive, so you may not. Some of you guys are swing traders. Some of you guys are intraday traders. This tool helps you with no matter what framework you follow, it'll help you with that. So me personally, I am a swing trader. So what I would look for in Aussie Kiwi is I see this level of support, very obvious, nothing fancy, nothing crazy, just a horizontal level on my chart. I'm going to make this yellow. You can see that you are at this level of support. So I would like to wait for this level of support to be broken if price allows it to. Then I also see that 200-day moving average as well, which could be support. So for me, I'm going to wait for one thing, a break below this level of support and this 200-day moving average. If you get that break and a retest, then I'm looking to go ahead and hold this market short as long as the edge finder reading is bearish. It is literally that simple. And, to Nick's point earlier, is like, some people are super focused on just gold or just the dollar or just whatever. This opens your door to explore everything that is in play. So right now, gold is a trade that I'm in right now. It's been flat. It's been doing nothing. While that's happening, I can look here and be like, okay, maybe I don't want to trade gold. Maybe I can look to add something else to my outstanding risk. And Aussie Kiwi is one of those things. And I just wait for the confirmation. So for those that don't know, that is basically how you use the tool and a quick breakdown of it. But Marco, how you doing, man? How's your morning been?
I've been doing well. So got rested from the last week, which was pretty hectic, I would say. So trying to kind of freshen up to get some new trade ideas, because last week a lot has happened. Usually I'm not that quick to react. I need some time to pass to gather my thoughts and see what's the next step. The next step, in my opinion, is still going to be to buy the yen. So long-term buy the yen, although I have reduced my size on the Swiss yen short. And I need to have a view on the dollar, because just for the viewers, every single professional trader has a view on the US dollar because it's ingrained in pretty much anything that you want to trade. So my view on the dollar would be, let me type it in here. So here is UJ. I think the NFP prints strong. I think the CPI prints hot. And I think the Fed will be dovish. So essentially, if I look at just a little bit of stats here for the NFP, let's just focus on that. On the calendar, you can see that the forecast is for 85K, while if we go to Polymarket, let me try and find that Polymarket NFP August 26, which is actually going to be for the July print. And on Polymarket, the 36% is for 100K to 150K. Now, I do need to note the volume is really small, so this is not really a good, let's say, number to look at, but I still believe it prints out at 100K or maybe even higher, which is going to be, as we know, bullish for the US dollar, right? So the best game plan would be to possibly buy the US dollar during the NFP, buy during the CPI, sell just before the Fed, and completely flip after the Fed meeting, meaning sell the dollar and go risk on. So buy stocks, for example. So that's kind of what I'm seeing for the dollar. But what about you? What's your take on that? And also, just sorry to not forget, I think this is a bit overdone. I think we overshot here. And by the way, did you see the Scott Bessent note? So
yes, by 5 to 10 billion, I believe, worth of yen.
yeah,
I don't know if you saw this morning too, Marco. I'm gonna flip here to my. Yeah, that's a very telling picture. I wonder if it was intentional. You think he knew what he was doing there? I think he did.
yeah, it's absolutely staged.
Yeah.
I mean, if you're a professional trader, would you write down to buy Japanese yen and then put JPY in brackets? Like, and Scott Bessent, he's like 60 years old. He's been in the markets for years. He traded the yen before. He traded dollar yen before, so he's not like a total noob that would write something like this. So someone who is it maybe 1 year in the market would do something like this. But so I think this was staged intentionally for the reporters. We do know that Bessent was put in place by Trump. So Trump, we know, runs a reality TV show as the U.S. government. So he likes the theatrics behind it, and then Scott Bessent has been picked. He would write only JPY if it was a note for himself, basically. But I mean, do you really need to write the note? Like, maybe, but
Right.
not.
That's what I was thinking. Yeah, you just keep. That's not. He's not like. That's not a humongous equation or a humongous to-do list. I was thinking like, that's just like, the only thing on that paper is that. Like, that's not. That can take up mental real estate and not, whatever. But
yeah,
I was thinking the same thing.
What would be even funnier if he wrote like below this, if he wrote, I don't know, buy milk, or like go to the grocery store, like a
Use
real
the
to-do
restroom.
list.
Or,
Yeah.
like that's not something you write down, right? Like you just do it. Yeah. So I thought that was interesting as well. I will say though, on the contrary to what you're saying, and again, this could be also just an attempt to kind of continue the UJ drop while not having to actually commit any funds to this. A little hint of verbal, you could call it verbal intervention or whatever, spooking the market. He did say earlier this morning that they were willing to do whatever it takes to support Japanese yen. But again, that could very well just be a quick last attempt to get a little bit of a last flush out. I will say, Marco, JXY here, so the yen basket is at a very key level. You have the 200-day moving average right here where we're at. Also, this level of potential resistance here. So I do like this level if you were to take this as a buy the dip on the yen. And in fact, or sell the yen, I'm sorry. And in fact, too, this was my original level that I had in mind as well. So definitely not off the table for me.
Yep.
The only thing is, I don't know what the NFP would actually be, so the risk reward would be better if you were to front run the idea and be early on it. And then the trade-off would be, well, if you're wrong, you just get off really quickly. And then you get more of the move, versus if you were to wait for the NFP to happen and it confirms the idea, then of course you get filled somewhere over here or over here. Who knows? You make less, but you have more clarity or conviction. I kind of don't have that decision made right now. I have a couple days to that, but we'll see. But NFP could really sway the decision for $1, right? If you were to get another one of, let's go to S&P 500 real quick and go to June 5th. This was that strong NFP candle, but the market sold off on that. Why? Well, because the labor market's doing quite well, and the Fed could address inflation instead of the labor market, and that's hawkish, right? So that sent it lower. So I think we're gonna get a similar reaction. That if you're not aware of the context, you can get caught off guard a little bit. But yeah, that's an interesting take. So you are looking to go ahead and be bullish on the dollar going up into the event, correct?
Yeah, I'm looking into that. I wish Polymarket had a bigger volume on the bet, because there's a lot of cases where you can actually look at Polymarket and ignore or bet against the Forex factory calendar or the Bloomberg analysts' prediction, because the thinking is like the analysts, they have a lot of biases that makes them guess incorrectly. And one main bias is they're afraid to put out a big deviation from the expectation of their peers, because if the number comes out similar to the forecast, the general forecast, then they look stupid. So for like Bloomberg analysts and analysts predicting NFPs, they very, very rarely deviate much from each other when it comes to predicting. While on Polymarket, it's real money on the line. So all of the biases, all of the how will I look to the public part of the equation is gone. So you get a much more clear, much more accurate reading on Polymarket. And it's currently reading higher than the Forex Factory calendar. That's why I think it prints even better than expected, and much better than the previous number as well.
That's what I love about prediction markets, Marco, is that when you have money on the line, you obviously want to be more intentional and more precise with your information and your calls. And
Absolutely.
so when you add more volume to that, you get efficient data. That's what trading is. I think I've heard Nick, it landed really well when Nick said it one time. But like, you are like indirectly, whether you think it or not, you are like in the information business. Like a lot of people would say like, well, what is it that you do? You just click buy and sell. Like you're not adding anything to society or anything like that. Like what do you do? Right. Like, and to a point, to an extent, they are right. But also you're providing information because you're feeding a data feed with money on the line. And so the more volume that you get, the more efficient that data becomes. So that's actually a very nice tool that I actually really didn't think about, Marco, until right now, when you looked at Polymarket to see what the odds are landing for different forecasts. Whereas like Bloomberg, or like you said, Reuters, or all these people, these channels where they kind of don't want to deviate too much, because to them, they're kind of just putting something in the air. Like there's no money on the line.
Exactly.
So it's safer to just be
to look stupid.
It's safer to be in the crowd.
Yeah.
It's safer to be in the crowd rather than like be the black sheep out there. And if you are the black sheep out there and you're wrong, you just look, like you said, dumb.
And you don't make any more money. So the incentive to be super accurate on Bloomberg is not that high. But we traders, we do price discovery. I think that's the general explanation. So we serve as price discovery, which should make us feel a little bit better. But like I know I've read about traders who use solely, or not solely, but mainly like Kalshi and Polymarket to trade in the traditional finance, by comparing what is expected by the crowd, what are the predictions saying on Polymarket and Kalshi, what are the analysts saying on Bloomberg and Reuters, and then they look at where's the edge, which one is the most accurate, where's the deviation, what is most likely to happen, and that's the trade. For example, we have for the midterms, there's quite a lot of volume on Polymarket, and I think there's actually a greater chance for Democrats to win the midterms compared to the Republicans. If I just bring it up here, so let's remove this, put my screen back, and so balance of power 2026 midterms. You can see a Democratic sweep is at 46%, and the volume is almost at 10 million, which is quite good. The higher the volume, the more accurate the prediction is. So if the Democrats win, and if you know what will be the repercussion for the markets, well, that's tradable right there. Personally, I don't know much about it, so I just know from a quick search on Google Gemini. So does Trump lose some power if we get a Democratic sweep? Blah blah blah. Apparently, Trump does lose some power, but how does that translate into financial markets? Beats me. Something for me to research a bit more. Yeah.
I don't know if it's that impactful. I think there would probably be other themes at play. You know.
Okay. Yeah.
I was gonna, if I may, Marco, overstep a little bit into your segment because I have a question for you. Like,
absolutely.
This is something we've been dealing with for months now, this entire summer, which is the macro and the data telling you one thing, but then you have an overwhelming blanket, which is the Trader Hormuz stuff that's overriding that theme, and it's causing it to kind of deviate from what would usually happen. I really like how you've articulated your idea of like, kind of going or positioning long the dollar with the kind of anticipation of a stronger NFP report and all that good stuff. But let me ask you this. Like we had Scott Besson today saying that the deal possibly Tuesday or Wednesday on the Strait of Hormuz. And then you have this here just happened where an announcement is expected to be, you know, regarding the Strait of Hormuz and the opening of it, and an announcement is expected today. Assuming that the announcement is a positive one, that would result in oil lower, yields lower, dollar softness. Do you take that into consideration still, or do you trade with that noise in the background? Because it kind of contradicts, right? Like if you're positioning, you know, dollar bullishness, but then you have this in the background, does that really affect what you're doing? Maybe you reduce size to compensate for, you know, out of the ordinary volatility. Like, what does that look like?
That's a great point that you just made, and it does go into the equation. If the Strait actually opens, markets will react to it. So I can't just say I'm gonna ignore it completely. If the Strait does open, it's an added risk, and I'll probably get taken out of my position if I decide to take it. And if it happens before I take a position, well, then my kind of whole game plan doesn't really work that well. So it does mess up my game plan for sure. If the Strait opens, then we're back to ping pong around the Strait. Is it open? Is it closed? And that's a different market to trade. So that ruins the trade idea. Absolutely.
And another just quick, will be a personal question to you, but you think this is it, Marco? We've seen plenty of this is over with. It's just going to be open from here on out. But do you think this one would be it or not? And I know I've asked you this question many times. So if you want to tell me, Alan, let's move on. That's perfectly fine.
No, I actually love talking about it because it's so uncertain, and it's interesting. At the end of the day, it's the $1 million question, because if you know the answer, well, you can make a lot of money. Personally, I think we just keep on closing and opening. Oil stays elevated, in my opinion, although I can see it's down again today. One thing that is really surprising to me, the markets are still reacting to Trump's posts and to his Truth Social and his war on, war off. We're going to attack over the weekend. Then we will have peace over the week when the markets are open. So I thought we were behind that, but looks like we're not. So we have to listen to the market. And I would say, looking at the past data in the last 6 months, we just remain open, close, elevated oil above 80, maybe above 90 even. And that's how we will need to trade for the next couple of months, maybe even 2027.
Awesome, man. Awesome. Yeah. I think at this point, I don't know what I would need to see to believe it. You know what I mean? So my assumption is this range right here.
I would say
for now. So before it was this range, and now I'm more into this one right here. So that's kind of what I'm looking for. But Marco, thank you so much for your time here. We'll talk tomorrow. This stream today has been one of the funnest days ever in terms of stream. So thank you so much for being a part of that, and we'll talk soon.
Yeah, I really love these joint segments, and I'm looking forward to seeing you tomorrow as well. And I'll think of some good trade ideas that we can do that maybe that aren't tied to the Middle East. For example, the yen. That's kind of not tied to the Middle East. But yeah, thank you.
Yeah. I'm watching Aussie Kiwi, man.
I know. So Aussie NZD, you wanna sell, right?
Yeah. I'm looking at it. I gotta wait for some technical confirmations there, but it could be one that's not too correlated, I would say. It's always going to be impacted, but not too much to what's going on over there in the Middle East. So that's something that I'm waiting for. But thank you, man.
Thank you as well, and see you tomorrow.
All right, bye.
Bye. Okay, so let's continue. Let me put up my chart. So I already did my initial segment, which kind of broke down the situation, gave you a general game plan of what I'm planning to do and going to do. Comments. Let's take a look. Open this thing so we can get back to doing business. Exhausting at this point. It has been exhausting from the start. Market opening up. Let me see. So personally, the SPY is looking really good. So the SPY is going up. I'm looking at some breakouts on stocks. So HPE just had a breakout out of this range right here. BRKR just gapped massively lower. Did we have some earnings? Yeah, earnings today. So, or yesterday. So this one is out. I'm essentially buying breakouts on individual stocks. Okay. So the only breakout I can see is nothing here, nothing. HPE, but it's red. It's starting to heavily retrace, so doesn't look so great. Doesn't look so healthy any longer. The main criteria for buying a breakout is that the SPY needs to be above the 50, the 20, and the 10 EMA, and all of them need to be curving to the upside. So this is an okay scenario right there, and looks like we just got all-time highs. That's good. It's good. That's a good sign. I like that. But let's get back to what I mostly trade, which is Forex. They call 100K jobs strong now. It used to be 200 to 300K. Yeah, but that was when interest rates were at 0, and that wasn't sustainable. 80 to 100K per month, that's still amazing. 200 to 300K per month, it's unsustainable. We can't do that for 20 years. Announcement is expected regarding the reopening of the strait. A high-ranking source told Al Arabia. Positioning USD weakness. Are you people a team? How many members in your team? A1 team. So A1 team, there's you can find all of the members on the schedule. If you go to A1 live stream schedule, okay, you can find all of the presenters right here, or all of the hosts. What's this? That's the picture. He sold access to his post in Truth Social to big banks. This might make... Well, I saw a theory on X that Trump sold his service of the Trump API, basically immediate access to his posts to big banks, hedge funds, big players, blah, 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 blah. So he may want to do a couple of posts that actually do happen, that actually have some substance behind them. So one thing that he could do is he can announce an opening of the strait, and it actually opens this time, so that he says to all of the buyers, look, I told you this is gonna be good. I gave you access, and you can make money off of this. And of course, then later down the line, he starts blabbing about stupid stuff. And of course, long term, it's probably a very bad investment. But initially, it could work. Nasdaq breakout, yields making a leg lower. Yields, let's take a look. Yes, making a big leg lower. Very, very interesting. What about the NAS? See, this makes me a bit hesitant. The NAS breakout out of the EMAs, it's good to see. This makes me hesitant to go ahead and buy the US dollar. I did mention the idea was to buy the dollar before the NFP, possibly add before the CPI, and then completely pivot as we get the dovish Fed meeting. And I think maybe the probability of a Fed watch tool, Fed watch tool. The probability is going lower, isn't it? I think it is. So 56.9, 43.1. And if we check Poly Market, let's take a look at Fed. What do we have? Fed decision in September. Yeah, so the chance of an increase is falling. We are now 51% for an increase, 48% for no change. So the markets are becoming more flat, right? 50-50. Yeah, we'll see. We'll see. The current developments definitely don't warrant a long on the US dollar. This blue color is sharp. Please try to change it to gray or black. I always keep getting comments about about changing the color, but I'm gonna keep it. It fits me. So yeah. That's all right. Way more reward in gold. Blue color. UJ going south also. UJ holding strong below 200 MA, looking good. Let's take a look. UJ, yep, seems to be holding. So it seems to be holding below the 200 EMA, which is good. The only trade that I have is Swiss yen. That's the only thing I have running at the moment, Swiss yen. The stop loss has been trailed to 198.055. I've taken 60% off. So this trade is doing pretty nicely, and I'll probably close the rest soon. I don't know. Well, sorry, no, for now I'm going to keep it running, but I don't like this. I don't like this message, because when someone so higher up puts a message like this for the reporters to snap, it's clearly staged. His main point is saying, look, I'm buying Japanese yen, USD JPY or Swiss JPY is going to go down. So the retail piles into shorts, and guess what happens? We go up, because the retail is almost always wrong. That's why I don't like to be in a short position, because I think the retail could be piling into it. So it makes things a bit tricky. Okay, makes things a bit tricky. It makes me very uncomfortable to be in the same direction as the retail and to be part of the retail. So essentially what I'm now doing, I'm listening to freaking Scott Bessent, the clown, who puts a note like this for the reporters to snap. Come on. And I also want to mention the sponsor of today's video or today's stream, which is going to be Ola Prime. So if you're looking to get funded, if you have proven your edge in the markets and you want to get funded, Ola Prime is a great option. You can get 20% off with the code A1 Live. So the link is in the comments and the link is in the description. Now, whatever you do, always check the Trustpilot. Always run through the Trustpilot. Always read the reviews. Talk to traders. Have they gotten payouts? What's their experience like? 4.5 out of 5. For this niche, I would say that is really good. 3.1K reviews, yes, really good as well. So the finance niche, the trading niche, it's tough to get a good score, and this is a good score. See all reviews. Read through them, okay? Read through the reviews. Check out the ratio of 5-star to 1-star to 2-star to 3-star to 4-star. And then make a decision based on the reviews and on the experiences of other traders. I know a couple of traders in the A1 Discord who have gotten steady payouts and who are pretty satisfied with Ola Prime. Plus, no consistency rule. Okay? So no consistency rule is an added bonus. If you're a swing trader and if you had to deal with this rule in the past, you would know that it's a big pain in the butt. Okay, so Ola Prime, A1 Live, link is in the description. Bro ain't fooling no one. But Marco, the retail will start to long that a lot, fading the move. The more it go down, and a shift could be a... Well, now you're really complicating it. So we can go up, we can go down. Absolutely. I just think that a lot of people are going to take this at face value, and they're going to think, oh, crap, Scott Bessent is buying the yen. This wasn't supposed to be public, and now it's public. There's an opportunity to buy the yen as well. I'm going to buy the yen. That's how a newbie is thinking, probably. Like, if you think of yourself as just at the start of your career, what would you do? Well, what I would probably do is I would say, damn, I can't believe that that Scott Bessent is buying the yen. I can't believe that this got leaked. This is massive. Let me pile into this. Let me sell Swiss yen, or let me sell dollar yen and get eaten up by swaps. I may be wrong. My win rate is below 50%, so most of the time or half of the time I'm wrong, but that's my current thinking on the situation. Currently, retail is bullish, leaning on UJ and USD in general. Okay, interesting. Well, we can run it through the edge finder. Let me see USD JPY. Neutral at the moment with a flat 0. That's interesting. The COTs are bullish. The crowd sentiment is flat. Okay, the crowd is flat, but the COTs are bullish. Okay, yeah. I do have one more minute left, and then I think we have Tiger coming on. So let me double check. Stream schedule. Yep. Okay, so Tiger should be coming on. As I told you, only position right now is Swiss yen. I'm looking to trade my individual stock picks, and HPE starting to improve. Okay, we're getting the breakout. I may buy this. Yeah, I may buy this. Put the stop loss below here. Doesn't look so bad. Yeah, new all-time highs on the SPY. Really good to see that. Love it. The Qs are improving as well. We got the V reversal right on the bottom here. So that's interesting. I think this was right when Leopold basically got liquidated. Okay, if you don't know who I'm talking about, it's this guy, Leopold. See? This guy. He looks like a lizard. He looks like the Zuck, but yeah. So he got liquidated. I guess a lot of his holdings were bought up by Citadel. That made the market a bit more confident, made the Qs and the SPY go up. Usually when something like this happens, from my reading, that signals a market bottom. I think a similar thing happened to ARK, which is ARKK? Yeah, ARK Innovation ETF. Also, let me see if Tiger is coming on. Let's take a look. Tiger, are you on right to the show? Maybe I'm missing something, James. So if you can just let me know, is Tiger on today or is he off? He's not. Okay, then I'll wrap it up. It's fine. So that's about it from me. That signals the end of the stream. Just a quick summary. Okay, so the calendar wrote it wrong. Quick summary. I am in a short on Swiss yen. I'm looking to do something with the dollar. I can see some positive development out of the Middle East. Oil is going lower today a lot, so makes me a bit hesitant to buy the dollar. For any updates, you'll be notified in the A1 Trading Discord. I wish you guys good luck in the markets, and you can catch me tomorrow. I'll be streaming every single day of the week, work day of the week, 2 times per day. So thank you. See you in the next one. Goodbye.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.